Good morning, everybody. Welcome back to another episode of The Market Open. It is Tuesday, April 21st. We are live early, 20 minutes early today because I felt like starting early. I wanted to start the show early. Woke up early, wanted to start the show early. So that is why we are early. I'm just kidding. We got Trump live in about 4 minutes. They said 8:30 he'll be live, and so we'll be taking a listen to what he says. Might be a little bit later than that, but we're going to see. He's on CNBC. He's not on like the regular business networks or the regular news networks. So I imagine because he's on CNBC, theoretically, he should say some stuff that's bullish for the stock market. He might end up saying some stuff that's bearish. So it's always a little bit of a gamble. We're going to see what happens, but he should be live in a couple minutes and we'll see what he ends up saying. Pre-markets are green, folks. They are greeny green. I mean, like we are very green. S&P up 0.34%. You got Netflix that's up. Nvidia pushing 203. Palantir 147. Snapchat, Grab, Navitas, Ondas, Nebius up 1.6. Arc, Tempest, Uber, Roku, Oracle, Amazon, Apple. We had big updates with Apple yesterday. CEO Tim Cook is stepping down. Apple actually a little red in the pre-market, slightly flat. And then Amazon investing $5 billion into Anthropic, another 2.63%. That is green. Question is going to be, can we hold on to this green momentum going into today? Obviously, yesterday was the end of the 13-day streak on the NASDAQ, the best streak since 1992. And so, yeah, the streak ended. It is what it is. We're down about 0.3% on the S&P 500 yesterday. We closed at 708. We are basically up the same amount that we lost yesterday in the pre-market at 711. Now, it is going to be contingent on Mr. Donnie T, and we're going to see what he says to hopefully keep this going. Iran 49.30. That's up in the pre-market. I mean, we've got a lot of stuff. Credo going crazy, up 4.6. A-Lab up 8.6%. You got Beyond Meat coming back. That's up 16% pre-market. Just a lot of names that are getting a lot more love carried by the broader indices and obviously technology. And we'll talk more about some of the headlines from last night and kind of how this macro environment is shaping out to be. But Trump being live is going to be very important to see what this ends up playing out. Did you invest in Snapchat? I did not invest in Snapchat, but it's one of those names that theoretically could be having a turnaround with the layoffs and the cost cutting. The CFO did leave yesterday. So in the broader advertising sector, it's one of those things that we are looking at. We did get job reports about 20 minutes ago from ADP, and those are also pretty good. So U.S. private hiring, 54,750 weekly jobs, which is not bad at all. Fifth consecutive week of improving hiring trends, up sharply from 40,000 in the prior period. It's up 500% from early March levels. January lows were 5,500 a week. March 7th was only at 10,000. And based on the data we got this morning, we had 54,750 net new jobs that were added in private payrolls, which is good. I mean, you have more jobs in the economy. You have more people willing to spend. You have more earnings growth. So if the job numbers are real and if they continue to have a positive impact on the broader earnings picture, the perception of S&P 500 earnings should continue to go higher, which is kind of the reason I think we've been elevated even in the first place over the past couple of days. And hopefully that continues. I will be streaming Trump live once he's live. He's not live yet. Whenever he's live, I'll be switching over to him. And so for those asking, where can I listen to it? You'll be able to listen to it here. June, what's up? Good morning. Robert, Peter, S.A., Matthew Sandberg, what's up? Rudy, yup. Rocket Lab ups in the pre-market. UNH also, not a bad earnings. That's up 8%. We'll talk more about UNH hitting 350 right now in the pre-market, which is very nice. Philip Broom, what's up? Nico, Jeremy, Alpha Zone, SoFi. April 29th is going to be crazy, dude. I just realized April 29th, not only do we have Meta, Microsoft, Google, Amazon on the same day, which hasn't happened since 2020. We have SoFi in the morning, and then we have the Fed meeting in the afternoon. So it is just going to be a massive day, April 29th. I mean, it's going to be one of those days where we're going to see just swings across the entire board. You have the biggest companies in the world reporting. You have the Fed meeting. By the way, Kevin Warsh is going to be testifying today in front of the Senate at 10 a.m., so we'll be watching that. And then you have SoFi earnings as well. Retail sales just came in 1.7% versus 1.4% expected. Okay, March U.S. retail sales better than expected, 1.7% month over month versus 1.4%. Core retail sales 1.9% versus 1.4. So you have a beat on retail sales and a beat on core retail sales, which is good. So you have a good jobs report today. You have decent retail sales data today as well. Again, Trump is not live yet. Once he's live, I'll switch over to him. But you have some decent beats across the board right there. Not bad. Matthew, thank you for the super chat. Soxel pushing 100. What a year. Yeah, the semis, I have some macro data that we're going to look at in a little bit around how well the semis are doing. But the semiconductor inflows are just unbelievable. I mean, you've got a lot of money coming into the semiconductors, and SMH is at an all-time high. Obviously, there's a reason that people are excited for the semis. They are leading the broader market right here as well. ASTS, yeah, it recovered a lot of what it lost, dude. ASTS was freaking $70 if you bought the dip on that. Congrats. I bought it before the decline, and it's kind of recovered here, you know? I think the FOMO on SpaceX is really starting to get to people. And as a result, you're seeing a lot more excitement there. All right, here we go. I think Trump is live.
President Donald J. Trump. President Trump, welcome. Thanks for joining us this morning.
Well, thank you very much, Joe.
You are very welcome. Can you give us, I think it's on everyone's mind, the latest on where the Iran negotiations stand? We now know Tehran has publicly confirmed that it will send representatives to the meeting with Vice President Vance. What do you expect? What are you hearing at this point, sir?
Well, as I said 2 days ago, when they said they won't send them, I said they'll be sending them. They have no choice but to send them. What I think is that we're going to end up with a great deal. I think they have no choice. We've taken out their Navy. We've taken out their Air Force. We've taken out their leaders, frankly, which does complicate things in one way, but these leaders are much more rational. It is regime change, no matter what you want to call it, which is not something I said I was going to do, but I've done it, indirectly maybe, but I've done it. And I think we're in a very strong negotiating position to do what other presidents should have done during a 47-year period. We have 47 years where these bloodthirsty people have been killing a lot of soldiers, a lot of our soldiers, and a lot of other people. They've killed 42,000 people over the last 2 months. And, you get to a point where people don't want to mention that. They don't like mentioning that. 42,000 unarmed protesters, innocent unarmed protesters, many of them hung. So we're not dealing with the nicest group of people, but we're dealing with them very successfully. And the blockade has been a tremendous success. They said 2 days ago, we will open the strait. I said, no, we're not going to open the strait until we have a final deal. No, we want to open the strait. They said, we're not opening. We totally control the strait, just so you understand, for all the fake news out there.
And Mr. President, we've seen 100 days of the largest protests in Iran since the revolution in 1979. And I know how much you respect and admire and are concerned with the Iranian people themselves. And this is, I think, in large degree, one of the reasons you decided to embark on this whole thing, maybe among other things, but the timing was right. If we get close in negotiations right now, but the deadline for the ceasefire is tomorrow, if it looks like things are progressing, will you not necessarily extend it to a definitive amount of time, but will you let it keep going if there's progress in the talks before taking...
Well, I don't want to do that. We don't have that much time because by the time both parties get there, as you know, they just got the okay to go forward, which I knew they were going to do anyway. I mean, I don't think they had a choice. They have to negotiate. And, the one thing I'll say is this: Iran can get themselves on a very good footing if they make a deal. They can make themselves into a strong nation again, a wonderful nation again. They have incredible people. But they seem to be, bloodthirsty. They're led by some very, very unfortunately tough people. And I don't mean tough in a good way. I think it's very negative for the country because we're much tougher than they are, like not even close. But they have to use reason and they have to use common sense, and they can get themselves into a great position to make themselves into a great country, but a legitimate country, not a country based on death and horror.
And I think regimes only respond to certain things, and I understand your threats to bomb the bridges in the electric grid, but I don't think the regime cares about the people of Iran. And if you did that, I'm sure it's the last thing you'd probably want to do, but it would hurt at least some of the people that we care about and why we embarked on this in the first place. So that would be, I'm sure, a last resort for you.
It's not my choice, but it will also hurt them. It'll hurt them militarily. They use the bridges for their weapons, for their missile movements. You know, they're trying to move the missiles because we've obliterated most of their missiles, and they're trying to move their missiles around, even during the ceasefire, which I think was a good thing because we're totally loaded up. We have so much ammo. We have so much of everything that we've, like, a much more powerful than it was 4 or 5 weeks ago. So we've used this to restock, and they probably have done a little bit of restocking. We caught a ship yesterday that had some things on it, which wasn't very nice. A gift from China, perhaps. I don't know. But I was a little surprised, but because I have a very good relationship, and I thought I had an understanding with President Xi, but that's all right. That's the way war goes, right? But I will tell you that our military is incredible, what we've done. I mean, think of it. In the first 3 days, we took out their entire Navy, 159 ships. 159 ships, and wiped out their Air Force, wiped out their anti-aircraft, all of their anti-aircraft apparatus is all gone. All of their radar is gone. Their leaders are gone. You know, their leaders are gone. The whole thing is gone. And frankly, this should have been done a long time ago. It would have been a lot easier because they were a lot less lethal a long time ago.
So to be clear, you're saying that you need at least the prospects for a signed deal today and tomorrow, or else you would resume bombing Iran.
Well, I expect to be bombing because I think that's a better attitude to go in with. But we're ready to go. I mean, the military is raring to go. They are absolutely incredible. You know, I built the military in my first term. I'm using it now. The military, when I took it over from Barack Hussein Obama, it was so depleted, so sad. And I built it in my first term. You remember those big numbers. You talked to me about it once. That's a lot of money for military. I built it. We did a great job with our military. And we're using it now and rebuilding it too. We've done a lot of rebuilding also in my first year of the second term. But we have we have the most powerful military in the world. Everybody knows it.
Since we're kind of tight on time, can we just talk about what something else happening today, and that is your pick for Fed Chair Kevin Warsh on Capitol Hill. We've had a couple of guests today say the best thing that we need now is for Jay Powell to leave in May like he's supposed to, and to have Kevin Warsh in as Fed Chair for that next June meeting. But we still have this Justice Department probe hanging over, and I've seen things that you said in recent interviews, Mr. President. I want to ask you again, if it would be possible for the banking committee to completely investigate all of your concerns about the cost overruns and the testimony of Jay Powell in front of Congress, if you could take that off ramp to get this moving, and Jay Powell leaves, Kevin Warsh goes in, is that something you'd consider dropping for the DOJ probe to let the banking committee handle it?
From the standpoint, Joe, from the standpoint that we have to find out why a small building costs close to $4 billion. It's not finished, by the way. They have a long way to go. They ripped down the most beautiful ceilings. They'll never build them again. The most beautiful, thick, 1.5 thick walls of solid masonry. They're never going to be built again. They put up 6-inch sheetrock walls, and they say, "Sir, we have no insulation. It's not in the budget." I mean, these walls. They had the best. That building was so beautiful. I would have fixed that building. I would have had it brand new, beautiful for $25 million. And they're going to spend close to $4 billion, maybe more than that. I don't know. It's not finished. In fact, I looked at it the other day. I'm afraid Kevin will have to have an office next to me in the White House because that building's not going to be done. He's not going to be able to use that building for a long time. And, you know, he had a complaint. He said, I didn't realize this. He said, the saddest thing is they ripped down the best building. He said there was a building that had beautiful boardrooms that he used many times when he was there, that beautiful boardrooms and meeting rooms. It was so beautiful, the nicest in Washington. And he said they ripped it down. And maybe they did that to save money, like the Gavin Newsom, the railroad, where they made it shorter in order to save money, but it's still 25 times over budget. But the worst I've ever heard is the railroad in California, and I think this might be worse. Think of it. I would have fixed that building, beautiful, quickly, $25 million would have been like a brand new building. I would have, all the ceilings would have been left. All those beautiful thick walls with gorgeous moldings would have been left. You're going to get a sheetrock ceiling, a sheetrock wall without insulation. They said, sir, insulation's not in the budget. Insulation costs you $100 a room. The whole thing is crazy. And they're at I think it's going to cost more than $4 billion when it's finished.
But
And
it would
somehow but Joe, somehow we have to find out how this can happen. It's not the
Right.
first time. How does this happen? Did the contractor make $3.5 billion?
Right.
You know,
if
I
the banking
sort of don't
committee
think-
could
I can't
take it over.
imagine-
Well,
I
it
can't
could-
imagine that Too Late is taking money on construction. I can't, but it's possible. But we have to find out why
Okay.
is a job that should have cost $25 million costing billions and billions of dollars? You know, I built the hotel. It's now the Waldorf. I sold it to Waldorf, and it's now the Waldorf. I built it for $201 million. It's a bigger building than the federal, and it was hotel rooms with bathrooms and, you know, partitions, and it's much more expensive to build a hotel room than it is a nice empty office space, right? And I built that for $201 million. This now is 8 years ago or so, but think of it. This building, you look at it, it's a little building. It's over, I think it's going to cost over $400 billion. And here's the thing, it's going to be nothing compared to what it was. They spent $4 billion, and it's nothing compared to what it was. It was beautiful. It had beautiful ceilings. They're all destroyed. They took them down. I don't know why.
If the DOJ, though, if this goes forward with Department of Justice and it delays him being confirmed, Kevin Warsh, it's kind of counterproductive for what you're trying to do in terms of changing the MO of the Fed up to this point. So I'm just trying to look for an off ramp to get for you.
Well, it is and it isn't, Joe. You have to find out why a thing like that could happen, because if you have hundreds of projects like that, you know, very few are like this, but if you had hundreds of projects like that, you have to find out why that happens. I mean, because we obviously don't do it right, but, you know, we have some great people in government that can do jobs. I build under budget, ahead of schedule. I'm doing a ballroom now. It's a much bigger job than that. And it's going to cost, depending on finishes, like $300 million. It's a much bigger job than that's ahead of schedule. And I have lawsuits every week from all these people, all the do-gooders that, you know, that stop progress in our country.
Well,
But,
I'm going to give
people
Becky a
love it.
chance, Mr. President, to get you to.
And you
let's
can
get
have
it-
some
let's-
extra time. I know my people said 20 minutes, but you can have some extra time.
Oh, thank you,
that's
sir.
that,
All right.
that's
You
good.
can
Yeah.
even put Andrew on the phone. You know, you told me Andrew would not be there, and I
No,
said I don't
that
care.
was
if he's
last
there or
week.
not.
That was last
But you could
week.
even put Andrew on.
Thank
Don't
you,
worry
Mr.
about it. You know,
President.
Joe made a
That was
comment to me when he tried to get me on. He said, "I promise I'll have Andrew Ross-Hawkins. He will not be there."
That's
He is
that.
there, and you can put him on. It's
That
okay.
was,
It doesn't.
I didn't say I'd have him. I said he's not in last week, but then you canceled because you were on the West Coast.
Thank you, Mr. President. Well,
Joe
I'll
said you
chime in
wouldn't
in a
be
minute.
there, and that's
He's
why
gonna
it's a
be
good time
so-
to be there.
Second, Becky,
But
go
I don't
ahead.
mind if he's there. I like him. I respect him. He's just wrong on a lot of issues.
There you go.
Thank
Okay,
you.
go ahead.
Mr. President, thank you. Let's
Hi,
talk a
Becky.
little bit about what you, hi, sir. Let's talk a little bit about what you expect from your next Fed president. There had been a lot of expectations. You've been very clear about wanting lower rates. But with the situation in Iran right now with higher oil prices, most people tell us that that's going to have to wait. The market itself is not anticipating lower rates or any rate cuts until at least the second half of this year. There's only a 41% chance or something of that, according to the market itself. Will you be disappointed if your new Fed chair, if he gets approved, doesn't cut rates right away?
I would. But let's talk about Iran first. Iran, I'm looking at your numbers now as I speak. I mean, the market's up. We're going to be at 50,000. That's where we were just a little while ago when it started. And when I hit 50,000 on the Dow and 7,000 on the S&P, I said, well, I hate to do this to everybody, but I'm going to have to journey down to a place called Iran and not make sure they don't have a nuclear weapon, because they will blow up the world. You want to see a bad stock market? Try blowing up the Middle East and then Europe, and then they come for us, right? And we're not going to let that happen. So I said to my people, they're all gathered, all these wonderful guys, Scott Bessent, the whole group, Howard, they're all doing a good job. I said, fellas, I got a little bad news for you. I'm going to put a little wrinkle in your numbers. Why, sir? We're going down to a place called Iran, and we're going to make sure that they never have a nuclear weapon because they'll use it to blow up, because they're religious fanatics, and they will use that weapon to blow up the world, but they'll start with Israel in the Middle East, and we're not going to let that happen. And they said, wow, that's going to be bad. I said, yeah, it's going to hurt the market, and it's going to drive up the price of oil and whatever it is. But that's peanuts compared to what would happen if we let this happen. And I told them, 47 years other presidents wanted to do it. They never had the guts, the courage to do it. I said, we have to do it. And they understood that, very professional. They're great guys, great people. Jameson's doing such a great job, all of them. And so I said, we're going down and we're gonna do our little thing. And we did. And we've, knocked out, we've totally won the war. If you read the New York Times, you think, oh, gee, when are we surrendering? We have totally beat them militarily and otherwise. I mean, I wish you could hear the conversations we have with them. We are victorious. If we left right now, it would take them 20 years to rebuild. And they can't get the nuclear dust because it was obliterated by the B-2 bombers that went in. They never got the credit they should get. They've tried to get down there. We have cameras from Space Force on it all the time. They've tried to get down. They can't get down. That place was obliterated. They did such a good job. The left tries to make it, tries to demean all the time, like, oh, well, maybe it wasn't totally obliterated. It was, and they can't get it, or they would have tried to get it. But the fact is that we took this little journey. And if you would have told me that the Dow is almost, I'm looking at your thing, I mean, literally we're at 50,000. And if you would have told me that oil is at 90 as opposed to 200, I would be frankly surprised. And you know what is happening? Boats are finding other sources. They're going up to Texas and Louisiana. They're going to Alaska. They're going to other places. It's an amazing phenomenon. When there are problems, people find out how to take care of things. And the Strait's very important, but people have found out. I mean, you're taking a look. Look at your numbers right now. I'm looking at where the stock market's up and where it's, look at that, S&P. The numbers are what they were when we started this whole thing. I thought they'd be down 20% or down a very substantial amount. Even when it was down more a couple of weeks ago, I was surprised. I thought it would be down much more, and I thought the oil would be much higher. And I'm very happy to say that it wasn't. And when it's over, and it will end, when it's over, they want it to be over immediately. And I just looked at a little chart. World War I, 4 years and 3 months. World War II, 6 years. Korean War, 3 years. Vietnam, 19 years. Iraq, 8 years. I'm 5 months. Okay, 5 months. I would have won Vietnam very quickly. I would have, if I were president, I would have won Iraq in the same amount of time that we won, because essentially we've won here. Okay. I mean, people can play games. The Democrats can say, well, we should have done better. No matter what. If I did it in 1 week, they'd say, we should have done better. Look at Venezuela. I took it over in 45 minutes. It was basically a 45-minute. And by the way, a very strong military country. And we took it over in a day, but let's be nice. But we basically took it over in 45 minutes. We took it over during the attack in 45 minutes.
Mr. President,
and they would say, I'm surprised they haven't said it, that you should have done it in 30 minutes. It took too long, So it's tough. But we can't let traitors. We can't let traitors like Schumer put pressure on you where they say, we want out. Think how bad that is. I'm negotiating with these people, and they're telling us, we have to get out now. We have to get out now. We have to get now. And they were in a war for 18 years. They were in a war for, think of that. Vietnam, 19 years. Iraq, 8 years. So
right.
I want to make a good deal. I'm not going to be rushed. I have all the time in the world. I want to make not a good deal. I want to make a great deal. I don't want to do this, go through this. And, I mean, if you look at this, what we've suffered in terms of losses, we lost 13 men, and that's terrible. I wish we didn't lose one. But if somebody would have said, we've done this and obliterated that country, obliterated it, and we lost 13 men, people would have said, that's not possible to have done that. It's not possible.
Right.
So we've done a great job, and I don't want to be rushed by people that are really treasonous as far as I'm concerned, and it's just, I watch this low IQ guy, Hakeem Jeffries. He's a totally low IQ person, and he's always ranting and raving, oh, this war is so terrible, terrible. They shouldn't be saying that when we're in the midst of a negotiation, because it does hurt us somewhat. It gives the other side some hope, and I don't want them to have hope.
Mr. President, I wanted to ask you about Anthropic, if I could, for a second, because this is a company that your administration has declared a supply chain risk. And I want to understand the determination for that. There's a view by some that it's political, but more importantly, at the same time that this is happening, reportedly, the NSA and other parts of the government are using Claude, which of course is the large language model of Anthropic, and how you square that.
Well, Anthropic is a group of very smart people, but they started telling our military how to operate, and we didn't want that. And they tend to be on the left, radical left, but we get along with them. In fact, they came to the office. They came to the White House a few days ago, and we had some very good talks with them. And I think they're shaping up. They're very smart, and I think they can be of great use. I like smart people. I like high IQ people, and they definitely have high IQs. You know, it's one of those things. And I think we'll get along with them just fine.
So do you think a deal will be made so that Anthropic will be allowed to be used inside the Defense Department in the future?
We want the smartest people. Now, in the meantime, we replaced Anthropic with somebody else. You know who they are, and they're very, very smart people. Sam Altman, the very, very smart group. We have a lot of smart groups. We have some brilliant people. We have the most brilliant people in the world. President Xi told me that. He said, Silicon Valley, he called it Silicon Valley. During a conversation, I have a great relationship with him. He said, you have the smartest people in the world. And we do. You take a look at what's happening with Jensen and all of these people. And it's a great honor to be working. I think Tim Cook, you know, I see he's retiring. I wrote a piece about him today. And I got to know him very well. He's a fantastic person, did an unbelievable job. And I say it respectfully, but if Steve Jobs had lived and ran the company, it might have done good, but it wouldn't have done, I think, nearly as good as the job Tim has done. And I got to work with Tim, so I really know it. I know what I'm talking about. He's a very unusual guy. He gets things done.
Mr. President, yeah, we did read your entire Truth Social post. I just want to return for 1 second and make an analogy here. You saw what inflation did to the Biden legacy and administration. So 22% price increases. By the time he was leaving, it was down to about where it is now, about 3%. But not a single.
It was down to 5%. It wasn't down.
Well, or 3, but not a single
person. And the reason
person.
it was down was because I had won the election, and it started falling after I won the election, and I started getting prices down from right after November 5th.
If you needed to prevent that from happening, let's say Chair Warsh thought, for whatever reason, there's some type of energy shock. Who knows with the blockade? Let's say that things got too hot. At that point, just to make sure there was no inflation, would you allow him to raise rates or not cut rates? Would there ever be a period where you could see that was something that a Fed chair needed to do? And if you said he might have an office right near yours, he might not want an office right next to yours, sir. I don't know. After what happened to Jay Powell, you might want to be across in those new digs, maybe.
Maybe I'd like him next to me. Actually, it's not a bad idea. Maybe Jay Powell did us a big service, and I call him too late. He's just too late. He's always too late, except when it came to before the election, but that didn't quite work out well for him. So the answer is I want Kevin. I think Kevin's great. He's central casting in a true sense. Okay, I think he's going to do a great job. Yeah, if there's time for, I've been in favor of interest rate rises to stop inflation. I think it sort of is effective. But there's one thing, and nobody ever talks about it but me, unfortunately, so I'm sure it's not correct, but I think it is. We should have the lowest interest rate in the world. When I was a young guy growing up, we always had the lowest interest rate worldwide. We always did. And then 15 years ago, 20 years ago, it started where Switzerland and other people had lower rates than us. And I just had a thing with, if you take a look at some of the, let's call them like elite countries. They're only elite because we allow them to walk away with $30 billion and $40 billion a year, but I don't do that so much anymore. I sort of put a clamp on that with the tariffs and charges that we charge them, because they were elite because they're making billions and billions of dollars from the United States, larger, and other reasons, and they run a good operation. But it's easier to run it good when you make that much money, where we have these massive deficits with You take a look at some of the countries, but Switzerland is one. They talk, oh, yes, we are a small and brilliant. Well, they're brilliant because they pay us almost nothing. Now they pay a little bit. They should pay much more. We'll get that up a little bit. But if you take a look at Denmark, you take a look at all these countries, you think of them so good. They pay such a low interest rate. Well, if we charge them, and what happened with me is I charged some of them and they squawked like you wouldn't believe it. They called and we are a small country. All of a sudden I realized they're not elite. We're elite. We're being sucked dry. And we can't do that. And you'll see that, we had a little setback with the Supreme Court. They said I can charge tariffs, but I have to do it a different way. And because of what they did, we have to pay back $160 billion. All they had to do is add one sentence, just one sentence. And that's, you don't have to pay anything taken in thus far back. But because they didn't add, and by the way, it was a close call too. There were justices that were powerful that I was right on the tariffs. But because we lost by just 2 votes, just little vote, 2 votes, we have to pay back $165 billion. They could have, with a little one sentence, you don't have to pay back tariffs that have already been received. You start from this point and you do it a different way. So we're doing it a different way. We're going to end up with the same. Actually, we'll end up with bigger numbers, actually, but it's a little more unwieldy, but it's the way it's been done. But it's so sad
Mr. President,
that the Supreme Court didn't want to save our country with one sentence, $165 billion. And we're giving a lot of that money back to people that hate our country. So I'm not happy with the Supreme Court. I'll be honest with you, okay?
Mr. President, on that topic, there's a whole number of very large companies, including Apple and Amazon and others, that have not sought reimbursements yet for the tariffs, meaning they haven't tried to collect refunds. And from what I understand, part of the reason that they have waited is because there is a worry about, frankly, offending you. Would you find it offensive for them to try to collect a refund?
I think it's brilliant if they don't do that. I actually think if they don't do that, they got to know me very well. I'm very honored by what you just said. If they don't do that, I'll remember them. I will tell you that, because I'm looking to make this country strong. Supreme Court could have helped us. Now they have birthright citizenship. They'll probably rule against us. No country in the world has it. It's horrible for our country. And I just see it, I see some of these Republicans that are nominated by me asking real bad questions, and looks like maybe we're going to lose that one too. Look what happened with NIL. They destroyed college sports, the court system, destroyed. So hard to put that one back, Humpty Dumpty, so hard to put that one back together. We had 150 years of rulings and everything else, and they had such a great system. It was a scholarship system. You get free college if you're a good athlete. You get this, you get that. And it took care of every sport. Fencing, not only football. Now it's all football, and the football is bringing down colleges because they're losing. Did you see Penn State lost $500 million last year?
Yeah,
Florida State lost $450 million last year. They can't lose that kind of money. They don't make that kind of money. And the court system, a person that never had anything to do with sports, a very liberal-leaning Democrat, liberal, she decided that the sports system that was in place for 150 years is no good. She never went to a game before. It's no good. And she said it's unconstitutional. And unfortunately, NCAA didn't even appeal it. I've won a lot of cases on appeal, to be honest with you. We got some really bad judges, but I've won a lot of cases on appeal. Some great people. We have, fortunately, some great people in the appellate courts. And I've won cases. They didn't appeal it. And
Mr.
because of that, college sports is a disaster right now. You have many people staying in college because they're going to make more money than they would if they went into baseball, Major League Baseball, or the NFL. They can make more money, a 7-year freshman. We have a 7-year freshman. It's crazy what they've done. And this is a person that never went to a game, acknowledged, not familiar with sports, but she overruled everything. She said, it's all unconstitutional, start all over again. And thank goodness we have people like Randy Levine and others that Coach Saban, who's so great. We have a lot of people got together, but it's very hard to put that one together. I will tell you right now, it's a tough one, but they're going to do the best. But if the courts had common sense, they would have done they would have done something that could have been very easy to do and made everybody happy. If they had common sense, we would not be paying back almost $200 billion in tariffs so stupidly. In many cases, the enemy is getting this money. The people that have hated the United States, we're giving them checks for billions of dollars. It's so sad to see. And it would be nice if the court system and the Supreme Court could have done things a little bit differently. Very sad. Actually, it's very sad. It's called no common sense. And look at the rulings we're getting on illegal immigrants. I mean, they're coming in murderers and everything else. We have a many-time murderer. It's really hard to get them out of our country, but we don't stop.
Mr. President, just in terms of putting things together, there's a story earlier this week about United potentially wanting to buy American. Senators from both sides of the aisle have warned that that is a step too far. You should not be putting these two large airlines together. Have you thought about that proposition?
I just heard it 2 days ago, and I know them both very well. I don't like it. No, I don't mind mergers. I think I'd love somebody to buy Spirit, as an example. You know, Spirit's in trouble. And I'd love somebody to buy Spirit. It's 14,000 jobs. And maybe the federal government should help that one out. You know, I told my people. But with American, it's doing fine. And United's doing very well. I know the United people, they're doing very well. I don't like having them merge. It's just like all of these aerospace defense companies and aerospace companies. We used to have hundreds of them, and now we have like a very small number. And you get one bid, and it makes them lazy. You know, I came down very hard on them 2-3 months ago because it takes too long. We have the best equipment in the world. We have the best, you know, the Patriot systems, the Tomahawk systems. We have the best stuff in the world by far. You know, the other day during this crazy war, we had 111. There's a dispute as to 111 and 101. I want to be exactly accurate with you people, because otherwise you'll write stories that I exaggerated. We had 101 or 111. Nobody's able to get it right, but the result was the same. Missile shot at one of our great assets out in that area, a ship. And out of the 111 missile shot, every single one of them was shot down, going at 3,000 miles an hour, right? You know, not easy. It's like a needle in a haystack. They used to call it impossible to do. So they go to 3,000 miles an hour. Every single one of them was shot down, mostly by Patriots, but every one of them was shot down. Think of it, 111 missiles coming at you, and every one of those missiles is now lying at the bottom of the sea, like the Navy, like the Iran's Navy is lying at the bottom of the sea. It's amazing, but we got to make it faster. So I have a push. You know, Raytheon took billions of dollars, billions, I don't even want to tell you how many because I'm embarrassed, for stock buybacks instead of buying plants. So I made it illegal for them to do that. No defense company. They have to build new plants. So we have plants. Raytheon now is building 5. They're all building, Lockheed's building 3 or 4. They're all building plants because we need speed. We don't want, you know, you order a Patriot and they say, we'll have it to you, sir, in 3.5 years. We want it in a week. And that's where we are now. They're building plants all over the country. And they're going to do well for doing it.
We appreciate all your time. If you have time, I want to ask you one more question.
Go ahead.
And, you know, we have allies now in the Middle East. Maybe some are, we can maybe count on more than allies in other parts of the world.
That's
but
true. They're much better allies than NATO, yeah. That I can tell you.
The UAE asking the U.S. for some type of financial lifeline. I don't know if it's a solvency problem. It's more of a liquidity problem. And I know we did, Secretary Bessent did something with Argentina that worked out. Is there some type of swap possible, currency swap with the UAE to help if they need it? And do you think there would be backlash because it's such a or perceived to be such a wealthy country? Is that under consideration?
It is, but it's been a good country. It's been a good ally of ours. And, you know, these are unusual times. They were more than anybody else. I mean, it was shocking because we thought that they'd shoot missiles at Israel, but not every other country in the area. And, you know, UAE got hit with 1,400 missiles. Now, fortunately, they had the Patriots and they had a great defense and they were able to shoot down most of them. But they did get hit hard. They were hit the hardest of the group, actually. And they're really led by incredible people. And, yeah, I mean, I'm surprised because they are really rich. You know, they invested a year ago, I went there and I got them to invest $1 trillion in the United States. They're building a tremendous plant in a great state called Oklahoma, aluminum plant, smelting plant, beautiful, incredible, it'll be the best anywhere in the world. You know, they're very good for this country. So yeah, if I could help them, I would. I mean, we're helping them much more with what we're doing with the war because, you know, the bully of the Middle East was Iran. Iran was a bully and bullied all of these countries around, and they threatened them all the time. And they threatened about the Hormuz Strait. They threatened, sometimes some people call it the Strait of Hormuz, which is actually a more beautiful wording. But they threatened them all the time. So we're really doing a big job there. Those 5 countries have been great, and Israel's been great. Israel's been a great partner for us. It's like they say, we're the big brother, they're the small brother, but the small brother's been very helpful to us. You know, they've displayed great courage. If UAE had a problem, I find it hard to believe, but if they had a problem, we would be there for them. Yeah,
are the Saudis impatient now, or are they on the other side where they?
Well, he's another great guy. You know, he gave me the famous line that I use a little bit. He said, "A year and a half ago, sir, you were a dead country. Now you're the hottest country anywhere in the world." He said that to me, and it's true. We were a dead country. We had a guy that wasn't respected. We had a country that was laughed at. He couldn't walk up a flight of stairs. Forget about down. He couldn't walk up a flight. But he was falling all over the place. I have to be careful because if I do trip or fall, it's got to be the biggest. That's why when I get out of those planes, I walk nice and slowly. I'm not looking to set any speed records. But we had an embarrassing country. We had a country that was going to fail. If this country would have failed if I didn't win this election, I'll tell you, I've had many people tell me that. Many people that aren't necessarily of the Republican persuasion or MAGA. But we've had many people say it, that this country would have failed if I didn't win this election. You people wouldn't be looking at the numbers you're looking at right now.
So the Saudis are not, are they taking it economically on the chin to the point where they want you to end this, or are they saying
I think
finish
they're doing
the job?
great. I spoke to him yesterday. He wasn't asking for anything. He wants to, they're fighting. You know, they're helping us. They're helping us on the strait. They're helping us all over. The ones that aren't helping are NATO. You know, NATO said to me, "No, we'll send somebody as soon as it's over." I said, "That's not really, you know, we don't need them. We'll never need them, actually. They'll need us. They need us desperately because they're a paper tiger." But I've said that. By the way, I've said that for a long time. Before I was in politics, I used to say it. I was not in politics, but I sort of enjoyed it, and I liked watching things. And I always said they were a paper tiger. And
well,
Europe has to straighten themselves out. Between energy and immigration, they have to straighten themselves out, or they're not going to have a Europe anymore.
Yeah, we could talk NATO, but I know you've obviously got a lot to do. We will be watching for any Truth Social posts about the negotiations, whether you hear what's happening. But thanks for all your time this morning, Mr. President. We greatly appreciate it.
Well, thank you. And Becky, thank you. And Andrew, I'm glad you were on the phone. I'm really glad. Even though Joe totally misrepresented, I don't mind that at all. Okay.
Thank you, Mr. President. We'll talk soon.
Good to hear your voice.
All right. That was a nice 35-minute interview with the President of the United States. Thank you, everybody, for being here. But we are now, I believe, finished with that interview. Real quick, before we get into all the market news, just for people that missed the entire thing or you came in late, this is the basic summary that you need. Trump said, "I thought the stock market would be down more when I went into my Iran excursion. Thankfully, it's not down as much." He said the Dow will be back to 50K. He said Iran will be sending their delegates to negotiate. We'll end up with a great deal. He said the United States is in full control of the strait. He said, "I don't want to extend the ceasefire. We need to get the deal done soon. I'm ready to start attacking again if nothing gets done." He then went on to talk about Kevin Warsh, but he didn't really talk much about Kevin Warsh. He said, "I'll be disappointed if he doesn't start cutting rates." But more importantly, Kevin Warsh can't get nominated to become the Fed chair unless Jay Powell and the probe from the DOJ that Trump's DOJ started back in January doesn't go away. And Trump basically said, "I'm not willing to take away the probe because the billions of dollars that Jerome Powell spent on the Fed renovations is egregious." And he went on to talk about how he built bigger hotels years ago than the Fed Jerome Powell building for much less than what it costs. So essentially, we got the same talking points we've got over the past couple of days around the Iran war negotiations. We just got a report that came in 10 minutes ago that J.D. Vance has landed along with Steve Witkoff and Jared Kushner in Pakistan. So the question now, which we'll find out probably in the next couple hours, is are the Iranians sending their delegates, which Trump confirmed on CNBC that they are. You got a lot of different quotes from the IRGC saying that we're not sending any delegates. So we don't really know. I think in the next couple hours, we'll know for sure if they're negotiating. But definitely the U.S. delegation consisting of Vance, Witkoff, and Kushner have went. And, now hopefully the Iranians come. And if the Iranians come, then there can be a negotiation. And hopefully that negotiation results in a bigger peace deal. Markets are green. They were a bit more green before Trump went live. I think some of his comments around continuing to attack is what led the market into a couple of red candles, but we're still holding on to the green. We did end the 13-day streak that we had, the best since 1992 on the NASDAQ yesterday with a red day, down 0.2%. We were up 0.2% in the pre-market, so we're kind of getting back a lot of what we lost. NVIDIA was pushing 203. Right now it's at 202.30. Astera, that's up 8%. GameStop's up. Netflix is up. Credo's up. Overall, across the board, you're seeing some green. The big movers right here, before we get into some of the big news from yesterday around Amazon and Apple, is HIMSS. Ironically, the big Amazon news from yesterday coincides with more and more verticals that Amazon is getting into. So why is HIMSS down 3% after it was up 8% yesterday? Amazon is, let me pull this up right here, launching Amazon One Medical, a national GLP-1 weight loss program offering injectable treatments starting at $300 per month and oral options starting at $149 a month. So, once again, the argument against HIMSS has always been it grows fast, good company, a lot of marketing, but is there a moat? And so many times the stock has been hit in many different ways, whether it's from Novo or Lilly or Amazon, because people just don't think there's a moat. One can argue that there is a moat and that the market is huge and that HIMSS will be able to succeed. And peptides is the real story, not GLP-1. But the point is, if the market doesn't interpret that in that fashion, then obviously the stock's going to get hit, down 3.84%. We'll see if the shorts double down today. The short float is still 40%, or if the dip buyers come in and can potentially squeeze the shorts. But that's why HIMSS is down 3% right now. Webull is doing a $100 million buyback. That's why that stock is up 9.7%. I think people knew about this yesterday because the stock was going up yesterday after hours, and we didn't really know why. It looks like it is potentially going to be because of that buyback. And it makes sense. The stock's down a lot from the IPO, so it makes sense for them to be buying back stock. And as a result, that's giving the street more momentum for Webull right here. Amazon, what was the big news yesterday and why is this up 2.5%? Amazon is investing $25 billion into Anthropic, but more importantly, not only are they investing $25 billion from Anthropic, that was announced last night, Anthropic will be spending $100 billion with AWS over the next 10 years. So think about it as $10 billion a year in basically new AWS revenue. This was like newly announced yesterday, and maybe some of the street models had priced it in, but if they haven't, Amazon could have a really good day if we start to see more of those price targets get a bit higher. They're going to be securing 5 gigawatts of current and future generations of Amazon Trainium chips. Amazon's AWS Bedrock platform will be working with Claude to expand it to 100,000 different customers. And then Amazon will investing $5 billion in Anthropic today, up to an additional $20 billion in the future. So this is super bullish Amazon. Obviously, Amazon continues to collaborate with a variety of different partners, and Amazon has that $50 billion OpenAI deal as well. So OpenAI and Anthropic will be spending tons and tons of money on AWS. I just don't think there's a reason to be bearish Amazon right here, especially with AWS acceleration. Street took it to 195 a couple weeks ago. If you bought the dip, congratulations. It's at 250 today. Hopefully make a run to 260. But this is one that probably deserves to continue getting the multiple that it's getting right now. Okta director just bought $267,000 of shares. First insider buy since 2017. That stock was up 5% yesterday. Another name that's kind of in that software sell-off, up about 1% of the pre-market. Not that big of a buy at $267,000, but you do have a little bit more of an insider buy. Beyond Meat, that's up 20% in the pre-market. It was up 41% today or yesterday. You're seeing a resurgence of the meme stocks coming back. Krispy Kreme was up yesterday. You have Bird that was still up. A lot of these names continuing to catch a bid right here. I think it's the typical thing that happens in a bull market. I don't necessarily attribute that as toppy. Yes, it feels a little bit euphoric, but if these companies went to zero, they wouldn't really affect the broader market. It's more concerning when Max 7 companies or really important companies that have real earnings get overextended, which kind of happened back in October of 2025. And Reddit was pushing $300, and I think Reddit's a great company. Reddit probably deserves to be a bit higher than where it is today, but $300 back in October was a little aggressive. When those companies start getting extended, that's bad. When your little meme stock sub-billion-dollar companies get extended, I mean, it's annoying to see it happen, but I don't think it's the biggest deal in the world. It just means there's excess capital, and some of that capital might be flowing into those companies. Is Nebius's NJ site going to be delayed for about 1 to 2 years? Yes. So we have some news on that. Nebius, right, they're up about 1% of the pre-market. Potentially, they were supposed to have a data center that was getting set up in New Jersey. And right now, there is a high probability that the New Jersey facility will be delayed for 12 to 24 months due to air permit issues, which was disclosed in the Form 6K that came out this morning. Now, the other reason this is not the best thing in the world is because there are plenty of protests against New Jersey data centers. There was one near Rutgers, which was the college that I went to a few years ago, where people literally set up. There was like 150 people, and they had megaphones, and they were just yelling about how data centers are horrible for the economy. Wow, him's really getting hit right here, 8% down based on this Amazon news. And yeah, there's just a broader retreat of people feeling that the data centers are not the best thing in the world. Now, I don't think it really hurts Nebius long term. Obviously, the stock went from freaking 80 to 160 in like 2 weeks. So if it goes back down to 140, which I don't even think it'll do, like it is what it is. I don't think people can be too upset. But yeah, I mean, this is more of a political issue versus a Nebius issue. And I'm sure it's going to affect a bunch of other companies that are in the data center space. It's just something they're going to have to deal with long term. So we'll see how the market reacts to it. It looks like that facility could be delayed. Again, they have a bunch of other facilities starting in Israel and Finland as well. That was disclosed over the past couple of weeks. So hopefully it's not the worst thing there for Nebius. Iran, that's up 0.5%. That is green. SoundHound, I don't know why that's up 7%. Let me know if they had earnings. I don't think they did, but there you go. 7% move. Again, some of these smaller companies, SoundHound, Webull, a lot of them catching a little bit of a bid today. BlackBerry was up yesterday, 13%. That one's flat in the pre-market. Adobe, that's up 0.2%. Air Test Systems is up 1.5%. Enphase up 0.83%. And then CoreWeave up 0.7%. Look at CrowdStrike. It's at 440. This thing got to 350 2 weeks ago in the software sell-off. Very, very nice that one is making a bit more of a move. Apple. Tim Apple is stepping down as CEO effective by the end of summer. He will retain his board seat as an executive chairman on the board of Apple. I really think this is a nothing burger, to be honest. As I did some research last night, the bull case on Apple is very simple. They have billions of devices. They actually implement AI features that people want to use. They charge a monthly fee, and they start printing a new source of revenue and potentially have AI devices that are synonymous with the AI software they're building, and then they can usher themselves into the AI era. The problem is Tim Cook really hasn't taken many risks when it comes to AI. The reason I called him Tim Apple is because Trump called him Tim Apple back in 2017. I know his name is Tim Cook, but it was funny when Trump called him Tim Apple. He like seriously called him Tim Apple, and he didn't even notice that he said his name wrong. But he took the market cap from 350 billion to 4 trillion, right? So he's done a phenomenal job, and he deserves all the praise. The problem is, you know, in terms of the AI narrative, I think it's not controversial to say that Apple has dropped the ball over the past 5 years. They have no investments in Anthropic, OpenAI, no meaningful models. I mean, I guess their whole strategy is to not spend on CapEx, let everyone else spend and then partner with them. That's a bit of a risk because maybe people start using ChatGPT more than they want to use the Apple integration with ChatGPT. So I don't think this John Turnus guy, who is the VP of engineering right now, who will now become the CEO, is going to be any different from Tim Cook. So quite frankly, stock's down 1% because the street's always going to react when a CEO steps down. But I don't think we're going to get a fundamental shift and change. I don't think it's going to be like a guy who's ready to spend hundreds of billions of dollars on CapEx. I think it's going to be the same old buyback stock, put out a new couple models every year, and then hopefully one of them takes off or their agentic Siri takes off, which we don't even know if we're going to get that in WWDC this year. And if it does, then, you know, Apple's going to be okay. If not, then I think people will still question what is the AI moat of Apple. So CEO stepping down makes sense. Tim Cook was inevitably going to do it. I just don't think it's going to change the leadership structure of Apple right now. ARM, that's up 1.5% pre-market. Adobe's up 0.28. IGV, software making a comeback. That is up 0.58. Poet up another 5%. It was up 18% yesterday. Marvell got a partnership with Google on TPUs. Also after hours, Marvell works with Amazon. So the $10 billion annual essentially contract with Anthropic is really good for Marvell. Poet works with Marvell. So he's got a lot of these smaller names that are benefiting from this AI semiconductor rush. And that transitions us into some of the macro news. Take a look at this. We got a bunch of different charts to take a look at to kind of solidify why this bull market continues to be very strong. This is the inflows in semiconductor ETFs. This includes SOXX and SMH. I mean, this is the largest monthly inflow, almost 5.6 billion that we have seen since 2019 in semiconductors. That is why your NVIDIAs, your AMDs, your Marvells, your Intels, et cetera. Intel got an upgrade today, by the way, to $90. And the entire quote of the upgrade, Intel up 2% right here, is that server shortages are more important than global foundries. And we've been talking a little bit about the server CPU market. I mean, Jensen has been talking about that as well at GTC. I mean, CPUs maybe is what takes Intel to a $500 billion market cap. Right now it's at 329, and the upgrade there was to $90. It's at 67 right there. So all the semis continue. I mean, Credo, right? Just massive moves across the board. If you are allocated to semis in some capacity, whether it's NVIDIA, AMD, SMH, whatever it is, Broadcom, it's been a fun couple of weeks. And if you aren't, then the question simply becomes how much of your exposure do you want to increase into the semis if we think this momentum in semiconductors is not necessarily slowing down. MicroStrategy up 0.16% as well. Where is BTC? BTC is at 76,000, which is what we were at yesterday. Jensen talked about the Adobe CEO this morning. He basically said he was trying his best to pump up Adobe, and he said Adobe is the most important company on the planet that has contributed to the way we tell stories. And agentic AI in the Adobe Creative Suite is going to be very important. So Jensen and the Adobe CEO both together trying to make the case for why Adobe is not going to be killed by AI and why they're only going to be accelerated through it. Street doesn't fully believe it yet. Adobe right there at 249.99. We also have S&P 500 targets that have started to get increased. We did a podcast, Steve and I, that will be coming out probably tomorrow with someone who manages $4 billion on Wall Street. Really, really smart guy. It's the first time I met him, but just like listening to him for an hour, I was just incredibly engaged in the conversation. And he has an S&P 500 $8,600 target. He is not a perma bear or perma bull by any sense of the imagination, but the way he breaks down the earnings picture, the 10-year rate, and then rates coming down in general, in terms of interest rates, it becomes very exciting to say, hey, what if we could apply a very common multiple 23 times, but the earnings growth and the 10-year re-rating is enough to kind of take the markets forward. So, I mean, 8,600 is a super bull case, but 8,000 to him, he thinks is kind of inevitable if this market continues going up. Obviously, it's contingent on the war coming down, or the war ending and then oil coming down. JP Morgan, they lifted their target to 7,600. The upgrade is driven by strong momentum in AI stocks. After an earlier war-driven sell-off, major AI leaders like NVIDIA, Google, Amazon, and Meta have rebounded more than 20%. JP Morgan expects continued strength from AI innovation, improving earnings momentum, and a stronger upcoming reporting season, which is also very exciting that you're getting a lot more people to kind of raise their targets simply because they think there's going to be more excitement and momentum coming into this market based on earnings. Deutsche Bank put out a report this morning as well. We looked at a couple of these charts yesterday. Net call volume is reaching an all-time high. People are buying calls like crazy, or at least trading calls like crazy. And maybe that's a little toppy as well because there's too much euphoria that's getting people to be excited. And I can understand why people are a bit scared of that. Which means, maybe there might be a pullback, but I don't think that's necessarily we're going back to the March 30th lows. And so, yes, maybe we could get a pullback from here. I don't think anyone would be surprised, but people are leaning in. And if we don't have a pullback and leverage is actually your friend right here and leaning in to the leverage, AKA the options, the margin, I'm really incredibly intrigued by what the margin profile for FINRA debt will look like. I mean, last time, I think in March, we were at like 1.2 trillion. I would imagine by the end of April, we're going to be pushing 1.7, 1.8 trillion in margin debt because people are probably just taking out money and putting it into the market right now. And they're willing to pay 4.25% or 6% on the interest, if they can make 20% in a week, which is basically what happened since March 30th. NVIDIA right there, 202.45. Again, HIMS is down because Amazon is launching their own GLP program. HIMS down 6.5%. The Dow is up. The NASDAQ's up. IWM is up. APLD, I'm not sure why that is up 5%, but that is green. We'll see if there's any news on APLD. Some of the other neoclouds are up. Nebius is up as well, 1.12%. Then you got Reddit. That's up 0.53. Earnings across the board have crushed. UNH is up 8.5%. I know a lot of people have been holding this one. It's not been the easiest hold, but congratulations. If you are in it, you deserve to get the gains on this. Let me pull up the earnings for UNH and a bunch of other companies that we had today. It seems like most of them pretty much did what they had to do. Wow. EPS. I didn't even see this morning. I saw the revenue beat, not EPS beat. EPS was a 16% beat. 186 versus 160. They definitely sandbagged on the guidance they gave last quarter, which is why they probably were able to get that massive beat. EPS is up 25% year over year. Revenue is up 29% year over year. Oh, sorry. I'm looking at General Electric, not UNH. Okay. General Electric, though, they crushed it. That was good. So shout out to GE. Where's UNH's numbers? UNH, still not bad. They beat by 9% on EPS. 723 versus 661, not too bad. Revenue's up 2%. I was like, revenue's up 29% for UNH. What the hell's going on? How many people are sick? Like, what's happening? But GE crushed it. UNH crushed it on the top and the bottom. They beat expectations. That was the most important thing. And as a result, you're seeing GE and UNH get some love. 3M also, not the sexiest company in the world, but in the context of utilities and industrials, they are doing very well. EPS is up 14% year over year. Revenue's up 4%. They beat on revenue and they beat on EPS by 8% as well. This stock is down 6.4% on the year, but these earnings, not the worst things for 3M as well. We got 4 minutes until the market opens. Kevin Warsh will be testifying today. UNH right there up 8.3% at 10 a.m. We're not going to listen to the entirety of him testifying. It's probably going to take like 2-3 hours, but we definitely want to listen to the opening statement because he will be the new chair of the Fed. And this guy has a lot of different thoughts about the economy, about the world, about AI. I think he is more on the camp of cutting rates. Trump did say this morning, if Kevin Warsh does not cut rates, he will be disappointed. So he is putting that burden on Kevin Warsh. Now, Kevin Warsh has to deal with a Fed governor, a board of Fed governors that are more split on the idea of cutting rates. So we're going to have to see how he navigates it. Amazon right there, 2.7%. But today we'll get the first look in terms of how he ultimately thinks of cutting rates. Webull again up 8% because of the rate cut, or not the rate cut, the $100 million share buyback. If we do get rate cuts, that will be good for Webull. All right, let me do a poll in the chat, red or green. I think it's a little confusing today because we were blistering green in the pre-market. Then Trump went live and he basically said that if we start attacking, and markets immediately fell on that. So I think now it's going to be a question of how much the markets believe that we will be attacking tomorrow when the ceasefire ends at 8 p.m. or how much Trump will be able to potentially extend the ceasefire, even though he keeps saying he doesn't want to extend it, which I kind of don't believe him. I think he does want to extend it. I don't really think we've come this far to only come this far, and then we're going to go right back to bombing. Like, I just don't think that makes a lot of sense. Tesla up 0.69%, the pre-market, 395. But hopefully we are able to get this deal and oil is able to come back down. Robinhood, $90. That was at 92 in the pre-market. Oil right now is at 87. It's not that bad. I mean, oil was at 117 a couple weeks ago, was at 94 last week. Now we're at 87. We haven't got back above 90. So if we can keep below 90, that would be very nice. And maybe that can ultimately help these equities. Amazon right there, 2.79%, again off that pump with the Anthropic partnership. Today, we're going to see if that can continue. Bloomberg put out a report this morning as well. Asset managers' exposure to S&P 500 futures has climbed to about $357 billion in net positioning. 3 weeks of positive net flows have added around $40 billion of exposure back. We kind of talked about this yesterday with the commodity trading advisors that are continuing to buy lots and lots and lots of equities because now they're systemically kind of exposed to continue buying more. With more than $20 billion added in the week through April 14th, the latest bout of stock gains isn't yet reflected in the CFTC data, confirming that an upward chase is potentially at a developed stage already. Goldman Sachs did say yesterday, we expect a pullback. We think the rally has gone too far. Again, not crazy for them to say that because, you know, we've had an incredible rally, but yesterday was the first red day of this rally, and it was down 0.2. I mean, we haven't really seen a massive, ugly pullback. Maybe we see it soon, but if we don't and the bulls continue to be in control and people continue to buy in and money continues to come off the sidelines, we had $200 billion, $175 billion leave off the money market funds last week. Maybe we get to keep this going, which would be very, very exciting. All right, 20 seconds until we get into it. 20 seconds of peace and silence before you guys know, before what happens. If you're new to the channel, you're about to witness what happens for the first time. Trump yapped a lot more than me today, so I've still got some more yapping to do. But ladies and gentlemen, it's Tuesday, April 21st, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. UNH up 9.5% on the day. Congrats if you're in it. It's been a tough hold, but there you go, from 240 to 350. There you go, 9.5% on the day for UNH as they beat on the top and the bottom on earnings. S&P 710. We were at 712 pre-market. Let's see, can we just hold this level, maybe make our way back above 711, which is where we had a couple days ago, and see if we can hold on to the green. Got some red candles coming in. Going to be a little tough to hold on to it, but it would be nice if we can get there. Hims down 9% on Amazon, announcing a competitor with GLP-1. Unfortunately, this stock once again gets questioned about its moat. And today with Amazon coming out with that product, I don't think it's necessarily going to destroy Hims, but the perception is that it could, which is why that stock is getting hit down about 9% right there as Hims takes a little bit of beating. Nebius, that's up 1.6%. Reddit is up on the day. Amazon 253 opens up a little bit down from 255, but you're still up about 1.8%. AMD, green, 279. We hit 281 yesterday, or sorry, we hit 287 yesterday. Let's see if we can get back at least above 280, which would be very, very nice. 3M is up 1.5%. APLD is up 3%. What about Apple? That is basically flat. Not too bad. Palantir's at 145.50. That's also slightly flat. CoreWeave is, wow, 119. CoreWeave getting a breakout here. We haven't seen 120 in a while. CoreWeave 120 right there, 1.83%. CRML down 8%. Why is that down? USAR is up a little bit. The rare earth stock's getting a bit of some red candles coming in. IGV goes red. That's going to hurt Palantir, Adobe, Salesforce today. Rocket Lab goes red, but still basically below 90. ASTS, massive recovery from the lows at 70. That's at 81, though. That's about to go red. CRML down 7. Microsoft about to go red. Zeta went red. Microsoft, again, part of the IGV, so that why that could get hit. Oracle also probably could go down. Oh, CRML diluted. Well, there you go. That's probably why that's taking a hit. Poet, is that continuing to run up? There you go. 987 on Poet, up 14%. I think that one's getting squeezed as well. We talked about this one last week. It's one of the photonics plays that hasn't really moved yet. So it makes sense that this one is moving right here. 14% on the day. It was up 14% yesterday. 750 to 980 on Poet in the past week. A lot of these photonics names have moved. That one has been one of the ones that hasn't. Adobe, that's down 1.4. Credo, that's green. Robinhood down 3%. Robinhood going down with the rest of the market kind of going down. S&P is very easily about to turn red. Unfortunately, you're seeing software and fintech once again get hit, which is not fun. SoFi goes red. Enphase up 3. SolarEdge up 4. Your green energy names based on a report about fuel cells entering data centers yesterday is probably what's bringing those up a bit more today. Micron, that's green. It's weird. You got Micron and Dell hitting new highs. And then you have a lot of these other names that are just going red. Novo red, OSS red, Celsius red, Uber potentially about to go red. Circle, that's red about 3%. AMD back to 280, yes. 278, that one potentially could go red. It's not really holding on to any of its strength. UNH got a couple of red candles, but still up 8% of the day. Not too bad. The Dow is very close to 50K, but it's not there yet. Bitcoin and Ethereum not really having a good day, at least compared to yesterday. 75.9 on BTC. It looks like S&P wants to go red, but it's barely holding on. We'll see if that one ends up flipping. Bloom Energy is up at least. Okay, so your energy name's still getting some love, which is good. The energy names holding on to a bit more of their strength. IGV, 86.49, that just flipped green. Maybe that could flip the entire software sector, potentially flipping green. SoFi just flipped green as well. Okay, that's good. Robinhood still down 2%. Maybe we'll see if that ends up flipping green. You know, the dips haven't lasted for long. Even yesterday, the market ended red, but a lot of those dips were bought up. I mean, Iran was bought up. NVIDIA was bought up. NVIDIA literally ended green after almost losing 200 in the pre-market or in the market open, and it ended above 202, 202.18 right here. Let's see if we can go for 203. So many of these names just didn't stay red for long. Rocket Lab 89.21, that one looks like it could definitely flip green right here. Navitas, that is up on the day, 12%. Look at that. Getting some love right there. Navitas and APLD, don't see the headline. I'll see if I can find it, but those two are both green. IONQ and the quantum names are red by about 2%. They rallied about 30% last week, so that's not too crazy. AMD still at 279. Where is Oscar, which they came out with a 8K and reaffirmed their fiscal year 2026 guidance. That one's almost 17, 11 to 17 in about 2 weeks. Not too bad for Oscar, 1695 right there. Is Car still halted? Okay, I finally found out what happened with Car, up 6%. This is a short squeeze, but not from retail. There are 2 hedge funds that own 95% of the float, and they've basically been squeezing the crap out of all the people that were short this stock. There's barely any shares outstanding. I mean, there's 34 million shares outstanding. They own the majority of it. So this is a artificially manufactured short squeeze from two specific hedge funds that own the majority of it. Not really retail. Now, retail, if you bought in, before this ended up playing out, then you've done well. But obviously, those two firms are doing the best. You had BTIG come out with a report on it. They said more attention is being paid to transports, but particularly now the largest component in the trans index is Avis Budget. The stock was 100 in mid-March and closed above 600 yesterday. We recognize there is a unique situation with two holders owning a significant amount of shares, thus leaving a minuscule free float. And as a result of that, you are seeing the squeeze. That stock halted right there, AMD at 279. So, I mean, I wouldn't chase this right here. I think it's definitely going to have an epic collapse eventually. But I also wouldn't short this because you don't know when that collapse is going to happen. But I don't know how long two funds are going to be able to hold this stock hostage, basically. There is nothing fundamental about it other than market mechanics that's causing this to really make a move. And really, for you to have bought it at 100, 200, 300, you would have had to have known that those hedge funds were doing that in order to believe it could keep squeezing up higher. Oracle right there, 178. ASTS just went red. IGV, 8650. And then Oracle is still green. CoreWeave as well, 119. As that one continues to be green. SoFi, 1970. That one flipped up, which is very nice. That was red for a second. Bloom Energy still going. Nice to see. AMD is that 230. AMD, or sorry, 280. That's not there yet, but still at 279. AXTI did dilute yesterday. AXTI down another 6% today. Walmart 127. That's red. Circle is down 3%. TSM 369. OSS at $10. We'll see if we get any more headlines on the war because we are still looking for that. I got one right now. Iranian government spokesperson says we have two lines of action, war and diplomacy. Both operate to preserve our central goal, Iran's national integrity and national honor. Any decision that is ultimately made must uphold it. It is clear that if we are told we have to surrender to something, that is an illogical statement. It cannot be justified to the public. We all aspire to minimize the damages as much as possible, and this issue is not a trivial matter. It is clear that we do not want additional attacks to take place, but if they do occur, we will certainly respond with greater force than before. In other words, our defense forces are on full alert, and at the same time, we are conducting negotiations. Okay, that's actually bullish. They're basically saying, look, we don't want a war. We really don't want more attacks. We're conducting negotiations, but if the U.S. attacks, we'll have to attack back, which is, I mean, yeah, it's natural, right? If one party attacks, the other party's going to attack. But the fact that they've admitted we are conducting negotiations maybe hits back against some of the claims by the IRGC that there are no negotiations, which is good because that means Shady Vance didn't go to Pakistan for no reason today. And hopefully we get a deal. ServiceNow, 100. ServiceNow, 100. That is green. That is green. Meta, 672. That goes green. Rocket Lab, almost 90. That goes green. Can the bulls step in? UNH, almost recovering to its highs, 352. Can the bulls step in is the question here and keep this green going. 708 S&P. It's very close to going red. So unfortunately, S&P is just not. Yeah. NVIDIA just got hit hard. 201 down from 203 right here. But you're seeing some more green candles across the board. Robinhood, 89, down from 92, still down 2.4%. Oscar, that is up. ServiceNow is up. Amcor, look at that. There you go. $71 on Amcor as that one continues to move higher, up 3.5%. Again, the semis, smaller names in the semis, they've just done well. They've just done very, very well. OSS, that's at 1007. ARC, 78.96. Ondas at almost 11. Meta right there at 671. Where are you seeing the negotiation news? This was posted by an Iranian government spokesperson on X. And that's where we got the exact quote. AP, Pakistan-led mediators have confirmed that U.S. VP and Iran's parliament speaker will arrive in Islamabad early Wednesday. Okay, perfect. So the biggest question was, will the Iranian parliament be there? Will they send somebody? Rocket Lab back above 90. Looks like they are. And the U.S. is obviously going as well. So both sides will be there. Which is important because we got to get this deal. We got to get this deal in place. ServiceNow, $100.30. Block at 74. Fastly down slightly on the day. ARM at 175. Carvana potentially getting a sympathy pump from Car, which is still halted at 668. I wonder if they're going to let this one run today or not. And seeing some more of this green across the board. BE, yeah, that's pumping from that solar fuel cell news. Wow, I think this is an all-time high on Bloom, 233. You know, there's a good stat I saw this morning as well. I'll pull it up for a second, and I think people have heard this stat for a long time, but essentially the argument is buying at all-time highs is just way better than waiting for a dip. I mean, the stat goes since 1989, if you've bought every all-time high, you have outperformed buying like on a basis when the market. So since 1989, money invested when the market is at all-time highs has actually outperformed money invested on any other given day, which is kind of crazy because you would imagine that money invested on the lows would outperform, but when you aggregate it and then average the aggregation of all those buys, buying on an all-time high actually ends up outperforming long-term. And the reason for that is because you don't want to miss the rally. And usually when you buy at an all-time high, there is a rally that's happening. Yes, there can be some euphoria there that could potentially create some topping action. But more often than not, you're going green. So very exciting to see some of this momentum continue to play through. 709 on the S&P as that continues to go up. Poet, my goodness, 23%. 1056. You talk about stocks that are getting squeezed. That one's getting squeezed. That one is getting squeezed. Apple 271. That's for the S&P. That's for the index. That's not for individual stocks. It's kind of like if you try to time it and buy when it's low or buy when you think it's going low, most people suck at timing it, versus if you buy at all-time highs and then just keep buying, you're more likely to outperform someone who's trying to wait for a timed bottom or a timed dip on a monthly retracement and then try to get back in. Like, it's just hard. The point is it's hard to time the market. And so I think you might have a lot of money on the sidelines saying, you know what? Yeah, I missed S&P at 630 a couple weeks ago, but I'm not going to miss it when it goes to 730. I'm going to buy it at 709. And I think you're having a lot more money kind of come into the market based on that perspective. Navitas, 17%. I don't see the headline on this one, but it's green. Yes, Trump was already on CNBC. If you scroll back earlier in the show, we took a look at it and listened to him for 35 minutes. Didn't really say anything that was that different from what he said over the past couple of days. So nothing really moving the market. ServiceNow, 101.85. 101.85. ServiceNow now up 22% from those lows. That's a big move, dude. If you're a hedge fund or an institutional investor and you bought a lot of ServiceNow in the 80s, I mean, you just made a lot of money for your clients and you got a really easy buy, theoretically, because software shouldn't have sold off at those levels right here. Amcor, 72.43. That one's not stopping. ALMU, that's continuing to go green. Do you think Poet's going to dilute right here? I mean, they already diluted early in the year, but look, stock's up 50% in 2 days. Yeah, I would expect them to probably dilute. But maybe there's enough demand to withstand some of that dilution. Beyond Meat, 12%, not getting a real big move here. But it is green. Caesars, 28, that's up 1.25. Rocket Lab, 90.87, that's up 1.62. Meta, 674. And then you got ARM at 176. SAS is trying to come back. Trump just tweeted, never allow the traitor Democrats like low IQ people, Hakeem Jeffries or crying Chuck Schumer, or the totally corrupt fake news media such as the phony and decaying Wall Street Journal or failing New York Times or dying 60 Minutes to demean or criticize Operation Midnight Hammer, which totally obliterated nuclear dislocations to the point where bloodthirsty Iran has been able to get to it or dig it out. Space Force has cameras on every inch of the 3 sites that were so brilliantly hit last June. Thank you for your attention to this matter. Okay. That's what you got from Donnie T. Navitas Semiconductor added former Broadcom senior VP Greg Fisher as an independent director, bolstering its high power and AI chip bench for the next growth phase. I think that is why Navitas is getting a pump because, well, they're bringing on some really good talent from Broadcom. So it makes sense for that one to kind of get a kind of higher leg up. And maybe it shows that they're going to be working more deeply with some of these broader companies in the AI space, like a Broadcom. Carvana, that continues to go up. Wolfspeed's up 5. Orbs now has $336 million of assets, 90 million of OpenAI, 25 million of Mr. Beast. Orbs invested in Mr. Beast too? I didn't know that. More than 11,000 ETH coins and 283 million world tokens. I didn't know Orbs was also in the Mr. Beast ecosystem. 2% on the day. That's green. Palantir, 147. Back at 147 for Mr. Palantir. Back at 147. HIMS, is it recovering? HIMS is, yeah, almost. It was down 9. Now it's down 4. So maybe that hopefully doesn't continue to fall down. Redwire, that's green, up 8% or up 4% right there. Robinhood almost trying to break even at 90. NVIDIA, 200.98. I think NVIDIA wants to break at a 210. I mean, it's like toying with a couple extra dollars every other day and then going back down. So I feel like earnings are going to absolutely demolish, and this thing is probably poised to be well above it if we have a bull market continuing by then. And I would imagine if Microsoft, Amazon, Google, Meta, which all report on April 29th, crush, NVIDIA's going higher. All of them are probably going to continue to affirm the capex they're spending is bullish for NVIDIA, bullish for AMD, bullish for Broadcom, all of those companies. AMD is still trying to get 280. UNH, 10%, 357. Congrats if you're in this one. Congrats. This one took a bit of time and patience, but it's green. It is indeed green. The Dow Jones, very close to 50, 49,824. I think it touched 50 for a second. Let's see if it gets and it breaks up above 50, which would be nice. 356 right there on UNH. AEHR, they completed their dilution this morning. That one continues to go up 5.8%. Not slowing down as that is green. Palantir, 147.37. Let's see if we can get 150 on Palantir. We've been waiting for that for a while. ASTS back to 83. I mean, it's 9:48, 18 minutes since the market opened, and a lot of those red candles, I mean, they're flipping green. Bloom, green. SMCI, almost $30, up from 19 from a couple weeks ago. Okta, that's green. Amazon holding 253. United Healthcare, 10%. Air Test Systems, 5. Microsoft, which was almost red, now green. Palantir was red, now it's green. Oscar was at 15 yesterday, back at 17. The bulls aren't easily letting this go. They're just not. They're not easily letting the market see this type of downside action. Bloom Energy up 4. Car unhalted, $708. As it's unhalted, 17% today. It's kind of funny. If there's only 10 shares available and 8 of those shares are owned and people are fighting for those last 2 shares, which is basically what's happening with Car right now, the stock kind of has to go up mathematically. There's more demand than supply. And then you have shorts that have to cover, which means they also have to buy shares at a higher price. Like it's just math on this one, but 100 to 700 is just unbelievable right here. Novo, that's down to about 2%. Uber's up 1.5%, and then Tempest, that's also up 1%. Is that the new GME? Yeah, but it's not retail driven, so I don't think it could be the new GME because retail didn't really get in on the action here. I mean, maybe some retail did, and if you did, congrats, but this feels more manufactured by the toots, which is funny because usually the institutions try to get retail on their side, and this time they just said, you know what, we're just going to manipulate it ourselves and make as much money. The question is, when do they sell? The 2 owners that own, there's 2 funds that own most of that stock. When do they sell it? And then, obviously that would cause a massive dump. But I wonder when that happens. Adobe right there, 250. We're trying to get back up to 250. Zeta was red. Zeta is now green. Software dip's getting bought up. Software dip is getting bought up. So isn't that considered a pump and dump? Yeah, pretty much. But, pump and dumps really have to do with more your public. So pump and dump is like, if you say you're bullish on a stock, you buy it, you tell everyone, and then as soon as they buy it, you dump it. That's like the legal definition, from my understanding, how the SEC considers a pump and dump. If you're a hedge fund and for months you're accumulating shares of a company, knowing that it's eventually going to cause a short squeeze, and then you don't kind of, publicize that you're doing this, you kind of just let it naturally happen, which is what it seems like, because I don't think there's been any public content from these funds. We don't even know who the funds are that have these names. It's not really a pump and dump in the same traditional sense, although technically it is a pump and dump. And so I don't know if the SEC would necessarily go after it as aggressively versus Roaring Kitty, who publicly said, I'm buying GameStop. He just never sold. So the SEC really didn't have a good case. If he had sold when he went live and said that he owns GameStop, the SEC would have an easy case because he dumped it based on the people he was telling to buy it. But he never ended up selling until like years later. Corey right there, 116. 116. Open Door, are you getting a pump? Open Door, a little bit, 5%. A little bit as that's green. Chris says they can't sell until September without having to get profits of the company because they are insiders. Okay, well, that means this car squeeze can probably continue going. We'll do some more research on this one and try to see exactly what's happening. 12.9%, just below 700, but that is green. Pound here, 147.22. As that one continues to go up. Equal weight S&P RSP, eyes first record since February. It's been a while since this one has got back to those highs. 205 right there on the equal weight. As that continues to be green. IGV, what a recovery, dude. Look at that, 2%. IGV was down 1% as soon as the market opened. It is so nice to see that get the rebound. It just means software is not stuck in this endless cycle of Anthropic saying something and then it collapsing. I mean, if the and remember last week Anthropic released 4.7 on Friday and software didn't budge. So if we are finally done with this nonsense of Anthropic ruining every software name every time they say something, then these stocks probably can have more freedom to just naturally make a move higher. SoundHound up 4, Marvell up 3. Marvell up 3 as well. Netflix down again. Wow. 93.99, lower than where it was last Thursday. Street really did not like those earnings, I guess. No one's buying this on the dip. I mean, put in the chat if you're buying this right here. Also, retail bought this at 70. You might have a lot of retail saying, look, tech is back. Risk on is back. Maybe I take my 20% gain on Netflix and get out. I saw a couple people on X sell their Netflix basically from that 72, 75 average. And I don't blame them. I mean, Netflix didn't really show any meaningful growth. And we don't know what the content story is going to look like now that they don't have Warner Brothers. So there might just be more compelling opportunities. Tesla right there, 391. Tesla 391. Suraj, thank you for the super chat. Is car back? Amit, I love you, no homo. I appreciate the compliment. Thank you for being here. I guess car is going to be back for a while if these people have to hold this thing until September and allow it to keep going. Open Door still making a move. We don't have any macro data today. We did have ADP data that we talked about earlier in the morning. 56,000 jobs we added in private payrolls in the week through April 4th. This is up from 40,000 last week, and this is the 5th consecutive week of improving hiring trends. Retail sales were also up 1.7% versus 1.4% expected. So we had more jobs, and we had better retail sales. HIMS back to 30. Look at that. This is when you know it's a bull market. Because if this was like February, HIMS would be down 15% on an Amazon headline threatening their moat, which has happened like 15 times over the past year. And today, the bulls are stepping in. They're like, nope, we don't want this to happen. Wow, pound here. Are we going for 148? Are we going for it here? Would be nice to see CrowdStrike also getting the breakout. CrowdStrike, Palantir, Datadog, ServiceNow, all of them getting the love from IGV pumping up. S&P back to 710. Oracle gets benefit from that. So if IGV continues to keep moving, you should see inflows into all the software names. Amazon still at 252. Still at 252. SpaceX draft IPO says Elon Musk bought 1.4 billion of employee shares last year and could receive 60 million more shares if the company's market cap climbs towards 6.6 trillion. Wow. The filing also points to a dual class structure that would give Musk super voting shares. I think the FOMO on ASTS and Rocket Lab and Lunar and that entire space race, ASTS right there at $84, is going to be massive. Like, we've been talking about this for months. It's part of the reason I bought Rocket Lab in the March dip. It's part of the reason I bought ASTS last week. I think the FOMO is going to be heavy. When SpaceX goes public and that thing opens up at 2.5, 2.7 trillion, which, yeah, valuation-wise is not going to make sense, but nonetheless, it's probably going to happen. Everything in space is going to pump. And I don't think it's crazy as a short-term trade to just have some space exposure, because the prices are kind of crazy as paying for them as investments right now. Like, I agree with that. Like, I don't think these companies are actually worth the prices that they're being shown right now. But if the momentum's towards space, I mean, people are going to want exposure. They're going to want exposure. And realistically, dude, if the underwriters on SpaceX think they can raise $75 billion in the IPO and Elon's comp is at 6.6 trillion, I mean, they must feel really confident that there's going to be enough demand. And if there's not, it's going to be an epic failure and it's going to be really ugly. But if there is, this thing is going up. And it's going to have an Elon premium for a long time. Microsoft 423, Amazon at 250. Kevin Warsh is going to be on at 10 a.m. So we got about 5 minutes, and then we'll see what Kevin Warsh says. I don't think he'll say anything that can necessarily tank the market. If anything, I think Kevin Warsh can pump the markets, because he's a hawk, but from my research, he really, really believes in AI being deflationary. And I hope he talks about that today, because if he does, he's basically signaling to everybody that he thinks we are getting ready for one of the greatest times in economic history around the level of innovation, and then as a result, the level of deflation in the prices of goods and services that we're going to see as an economy, which means we need lower rates. And guess what? That means growth stocks are going to catch a bid, whether you think they deserve it or not. The cost of capital goes down. People are going to start buying more equities. So, I mean, maybe that's also why Trump picked him to be. Maybe, I've been trying to figure out, why did Trump pick this guy? Because he seems like a traditional hawk. And I think the reason is because he so deeply believes in this AI deflationary narrative that that's how he's going to be able to convince the Fed governors, not on inflation because of consumer confidence, not on labor market statistics, but rather this macro technological tailwind of AI. And maybe some of the other Fed chairs, like a Rick Reeder, didn't really believe in it that much. And that's why Kevin Warsh got the job. SMCI up 2.84, Poet down from 11, but still up 20% of the day. And then Palantir cracking through 148. Wow, ServiceNow 104. 104 on Mr. ServiceNow. Microsoft also continuing to make the move. I mean, IGV, we haven't had a 2.3% day in a while. It's nice to finally see that make a move. Put in the chat if you're going to be buying the SpaceX IPO. Put in the chat. Or if your exposure is via a proxy. I'm curious to see how many people are going to buy it regardless, just because they think it could pump. Fastly also getting a little bit of move, up 4%, 26.45. Stock was at 25.50 2 days ago. Yes, yes, yes. No, hell no, hell no. Hell freaking no. Already have Rocket Lab, already have Rocket Lab. I'll wait. Okay, so a lot of you guys are going to wait. I think a lot of other retail investors are going to buy the shit out of it. I really think that thing's going to pump. And if it does pump, it should carry the entire industry with it. And who knows, maybe space becomes a new sort of commercial economy that just gets a lot more people excited. And, it ends up becoming this thing. Like, semiconductors weren't exciting to invest in until realistically ChatGPT. I mean, they've always had a cyclical narrative to it. Then ChatGPT came out. Everyone realized we need a lot of semiconductors, a lot of GPUs, and then boom, it became a thing. If space as an economy starts to form as an industry, and the AMDs, the NVIDIAs, the Broadcoms are the SpaceXs, the Rocket Labs, the ASTSs, then maybe those names continue to hold a premium. But they're going to eventually have to show the earnings growth to match up with it, because all the semiconductor names eventually showed massive earnings growth to justify kind of where they're at. Microsoft 423, Palantir 148.35. AMD back to 280. Once again, there you go. Back to 280. Oh, by the way, Jeff Bezos is raising $10 billion on a fund that's worth $38 billion. And this fund is called Prometheus. And the entire idea of this fund is that it's an AI lab. They're basically going to be investing in a bunch of these manufacturing AI companies, and they're going to be using all the data they get from that, from those investments, to then essentially make them more efficient and then buy other manufacturing hubs. And Bezos essentially is trying to say, I'm going to like usher in this productivity boom when it comes to manufacturing and efficiencies inside of warehouses. Obviously, he comes from Amazon, so he knows a lot about that. Via just buying up all these smaller companies or investing in them. And so that fund raising $10 billion at a $38 billion valuation, I wonder when that goes public and see kind of where the market would think of it from there. By the way, Morgan Stanley put out a chart this morning. They also think productivity is going to go through the roof right here. As you can see, AI adoption from 2020 to 2025 has led the productivity boom. The last time we had anything that was even similar to that was 1995 to 2000, which obviously was the internet boom. If AI can replicate that level of growth, then maybe we're going to see a lot more people get. Oh, we got the Fed Chair Kevin Warsh statement. He's not live yet, but here is what he said. Let's take a look at that, and then we'll flip over to him once he goes live.
Kevin Warsh. And guys, there was a setup because Warsh, released his opening testimony here. And I think this was the money line because it kind of gets to the heart of what I think a lot of the questions will center around, which is Fed independence. Here's what we expect the nominee, Kevin Warsh, to say. I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Central bankers must be strong enough to listen to a diversity of views from all corners. In other words, we can still be independent and tune out the noise when the president tells us we want lower interest rates. So expect to hear that kind of thing. And we heard from President Trump this morning on Squawk Box, and he very much made clear he still expects lower interest rates and is going to keep the heat on with this criminal investigation against Powell, and railed against how expensive the Fed renovation, the building, was again.
Right, which then puts the focus back on, I guess, Senator Tillis, what has been his continued opposition to confirming Warsh if that investigation continues.
Correct. And that's going to be the barrier here, the roadblock here.
And then when is Powell's term up?
May 15th.
And so what would happen if we didn't have a confirmed nominee?
Well, I guess you could have Powell, as he said, laid out before, stay in the role.
And then didn't Trump say Didn't Trump say he would fire him?
Well, Trump has said that, but I think Trump is fighting a Supreme Court battle now in terms of whether he has the authority to fire.
To do it. But he did say last week that he would fire, I thought, in another interview, that he would fire Powell.
He's threatened that for a while.
Right, but it was much more specific to if he stays in his current.
I was going to say, clearly
it's questionable whether he can, honestly, literally.
Right. And a lot of the question clearly is going to be about, Warsh, whether he'll be responsive to the economy or the stats.
Any comments on the Powell investigation?
Okay, it was Warsh and now it's Emily.
And
doesn't look like he was up for some questions from
Emily
Wilkins.
Yeah.
Nice try, Emily.
Give him a try.
He's obviously going into the.
Okay, so we'll get Warsh in a second. We'll see what he says. But basically, his statements are, we are committed to monetary policy independence. Inflation is a choice. The Fed must take responsibility. And Fed independence doesn't extend beyond monetary policy. So kind of some basic statements, nothing too crazy. We'll see more what he says later when he starts, which should be in a couple minutes. Look, I watched a bunch of videos and interviews of this guy over the weekend. I don't think he's going to be a bad Fed chair. I wonder how hawkish he's really going to be. And time will tell. But from my understanding, he seems really optimistic around AI, which should be good for rates. But if he's kind of playing both sides and maybe he ends up being more hawkish than not and we don't get rate cuts for a while, I know Trump's going to have a new punching bag because he's going to be pretty upset given Trump handpicked this guy. But maybe Warsh also got the memo that the reason he was picked was to get these rates to come down. Oh, yeah, we are getting the Pentagon budget today for defense. 1.5 trillion is the number. Includes 68 billion for 18 warships and 16 support ships. Okay, so we're going to get a lot more data today around this 1.5 trillion. This is also very bullish. Palantir, Ondas, Kratos, Lockheed, Raytheon, any of your defense contractors. This is also bullish. SpaceX, their defense contractor. Rocket Lab, Golden Dome, Anduril. if we actually spend almost $2 trillion on defense, it's going to go to a lot of defense contractors and a lot of companies. And there's a bunch of public ones that people are invested in that potentially could benefit from that as well. Yeah, it's very bullish space. So I'll try to get the exact details on that 1.5 trillion. And we'll see what exactly the administration is asking for. Warsh is still not live yet. He's not talking yet. As soon as he starts talking, I will flip over to him. Right now, a couple senators are talking. They're making their opening statements. And then we'll see if that flips. Why is cybersecurity pumping today? Honestly, I think it's part of the Mythos model, proving that we need more cybersecurity. That's been kind of a macro tailwind for them. But also, IGV finally getting a real recovery is helping the cyber names and the most sold off names, which was CrowdStrike, Palo Alto. A lot of those over the past couple of weeks. Why is Open Door up? I don't think there's a specific reason other than high beta getting some love. Pending home sales were up 1.5%. Oh, this is the reason. The estimate was 0.5%. March pending home sales 1.5. That's a 100 basis point increase versus expectation on the amount of homes we sold in March. In March, rates were still kind of high, so like people might be still getting a bit more bullish on housing and are willing to pay higher rates. I mean, my sister bought a house. She was willing to pay a higher rate. I think her interest rate came in at 6.1. And right now the average is at 6.4. But that's probably why Open Door is getting some love. AMD, 281. Pentagon defense budget includes autonomous warfare for $55 billion. They're requesting 85 F-35 aircrafts and $6.1 billion for the next-gen B-21 bomber, and then $65 billion for 18 warships and 16 support ships on this $1.5 trillion. We'll probably get some more details throughout the day on how much they want to spend in different areas. Microsoft 423, UNH at 354. Again, pending home sales were up 1.5% month over month in the month of March, which is good for Lennar. Oh, QXO, by the way, Brad Jacobs. I have never listened to an interview of this guy. They made an acquisition yesterday for BLD. They spent $17 billion. He went on CNBC and literally said the reason the stock is down is because of the shorts, and I love squeezing the shorts. I didn't know that guy was that type of guy. Like, most CEOs, they don't want to mention that stuff. They don't want to talk about the stock. They don't want to talk about the shorts. Like, he straight up said, yeah, I love squeezing the shorts. And I was like, hold on. That's getting me kind of interested. I already know he's a rock star. Stock's a bit of a discount based on this acquisition. And now you got a CEO who's not afraid to talk that talk. It's interesting. I know Steve likes that name. So maybe requires a little bit more due diligence. Yeah, Alex Karp is the only person I've ever heard, talk about the shorts that openly. So I was pretty impressed. Wow, Palantir 149. Let me check 150 resistance. Let's see if we can get it. 150 has 48,000 shares. 48,000 shares. Yes, Elon as well. That's true. It's just, Elon is Elon. He can get away with a lot of stuff. But Brad Jacobs, I didn't expect him to just straight up say it like that. So you got QXO that's slightly down a bit on the day. Kevin Warsh still not live yet. You still have the senators that are talking, waiting for them to be done. And then we will get to Kevin Warsh. IoT, that's making a little bit of a run today, 4%. All your software names should be getting some love. UPS and FedEx have begun filing for tariff refunds. You got about $167 billion that will start to be refunded, which theoretically could stimulate the economy if a bunch of these small businesses get their refunds and start spending back into it. Now it's going to explode our debt, but everything's going to explode our debt. So maybe that money going back into the economy is not the worst thing. S&P 711. Let's see if we can break 712. That's the pre-market high. That's the pre-market high. Yeah, SoFi will have earnings on April 20th. Dude, April 29th is going to be crazy. SoFi in the morning, Fed Jay Powell in the evening. I think it's one of his last meetings that he's going to have as Fed chair. And then you have Microsoft, Amazon, Google, Meta, Qualcomm, Chipotle, Carvana, Ford, Cheesecake, Teladoc, Sprouts Farmers. I mean, you just have so much that day. So the 29th is going to be going to be pretty wild. Okay, they still don't have Warsh live. They still have the senators talking. We're waiting for him to deliver his opening statement. AMD 281, Palantir very close to 150. Oscar still moving 1679. You've got PayPal also that's cracked above 50, 51, as this thing was down even further. Robinhood just tweeted, we've seen your questions and want to provide an update on the upcoming pattern day trading rule change. The $25,000 equity requirement is on its way out. Our teams have been building. We're fully tested and are standing by to flip the switch. It's probably going to take them 2 months officially for the SEC to allow it, but that's another bullish thing for Robinhood, for Webull, for IBKR, for all those companies. D-Wave down a little bit on the day. Oracle 181, CoreWeave at 117. 117 right here. Okay, some more updates on SpaceX. Musk will receive a stock incentive for every 500 billion increase in market cap, which goes as high as to 6.6 trillion, a total of about 60 million shares, which I would imagine is a couple $100 billion basically he's getting. And then if the space data centers can deliver, 100 terawatts of compute per year. Is that real? 100 terawatts of compute per year. We can barely do 1 gigawatt on planet Earth right now. I mean, 1 gigawatt takes like 8 months to set up and $10 billion. If the space data centers can deliver 100 terawatts, which is 1,000 gigawatts of compute per year, then Musk gets an incentive every $500 billion increase. I mean, dude, if he does that, he deserves all the money in the world. These are just ridiculous numbers, given the level of, given the level of execution it takes to put up even one data center on planet Earth. Like, it's not easy to do that stuff. Not at all. I mean, this is kind of reminds me of Tesla 2018 with that pay package, right? Like no one thought they would actually be able to sell that many cars, or I think the market cap he had to get was like 350 billion. He ended up getting it to $1 trillion. And then he got his package. Marvell right there, that's up 4% as well. Let me just confirm, how many gigawatts are in a terawatt? I believe it's 1,000, right? Yes, 1,000. So he's talking about 100 terawatts, which is 10,000 gigawatts per year in space. That is crazy, dude. We don't even have the infrastructure to really have meaningful data center capacity in space. Jensen talked about that a couple weeks ago. He's like, we're not really there yet, but hopefully we get there. I mean, goodness, if he gets it done, he gets it done. And the other way I think they get to a higher market cap is just obviously by merging Tesla and SpaceX together, which at this point I think is inevitable. I think it just makes sense. The question is going to be when they end up doing that. ServiceNow, 103.79. Oh, sorry, you guys are right. 100,000, not 10,000. Yeah. So if 1 terawatt is 1,000 gigawatts, then 100 terawatts is 100,000 gigawatts, and it's not once; it's per year. It sounds kind of crazy, but also that's why I guess his comp is going to be that high to get there. IGV still up 2.4. Okay, let's go to the Senate hearing. He's not live yet. I imagine he's about to talk in a second. Who's speaking right now? Well, okay. We have Miss Elizabeth. She has to say Warsh is up next.
Corruption. Third, the nominee before us today, Kevin Warsh, is uniquely ill-suited for the job as Fed chair. In our meeting last week, we discussed the 2008 financial crash, where 8 million people lost their jobs, 10 million people lost their homes, and millions more lost their life savings. Giant banks, however, got hundreds of billions of dollars in bailouts. Mr. Warsh was a Fed governor from 2006 to 2011. That's before, during, and after the crash. And he said to me, that he has no regrets about anything he did. So let's take a deeper dive into Mr. Warsh's record. In the years leading up to the 2008 financial crisis, he was an enthusiastic cheerleader for credit default swaps and complex securitizations. He dismissed repeated and increasingly urgent concerns from housing advocates across the country regarding subprime mortgages. He refused to use the Fed's authorities to address the risks that were building in the financial system. And when the crisis hit and the economy blew up, Warsh took on the job of Wall Street's personal liaison on the Fed board. He was quick to respond to concerns from Wall Street CEOs, and he worked tirelessly to arrange multi-billion-dollar bailouts for them with nothing for American families. No regrets, he says, no regrets. After the crash, most people on the Fed saw millions of Americans unemployed, people who'd lost their homes, and said, now might be a good time to lower rates and make the cost of borrowing cheaper for businesses to avoid more layoffs, and make it cheaper for Americans who are worried about paying their mortgages or their credit cards. But not Mr. Warsh. Nope. He wanted to keep interest rates high. And he sang the same song for more than a decade, even as the economy struggled. When the job of Fed chair became available during Trump's first term as president, Warsh held on to his high interest rate inflation hawk views, and Trump passed him by. Regretful, he soon reversed course and called for the Fed to pause interest rate hikes. Then, once Trump left office, Mr. Warsh flipped again and was even criticizing the Fed for cutting rates in the fall of 2024. But as soon as Donald Trump became president a second time, Warsh reversed himself once more and began shouting from the rooftops about how the Fed should cut interest rates. Evidently, he learned his lesson. This time around, he sucked up to Donald Trump to snag his dream job. Mr. Chairman, last week, every single Democratic member of this committee asked that you postpone this hearing and instead conduct oversight on the president's role in directing bogus criminal probes into Chair Powell and Governor Cook. The Senate should not be aiding and abetting Donald Trump's illegal takeover of the Fed by installing his chosen sock puppet as chair. It's an invitation for corruption and for economic catastrophe. We have the power to stop it, and we should be using that power. Thank you, Mr. Chairman.
Well, there you have it. I'll just say it is interesting that we're going to hear from Senator Dave McCormick in his introduction of Kevin Warsh, who was last time unanimously confirmed.
Okay, we'll wait for a couple minutes. Let's see if we can get Warsh. I think they have another couple senators potentially to keep giving their opening statements. 7:32 on Carr. It's halted again. It looks like this thing is just going up. So this is what the Wall Street Journal reported on this morning. Because SRS, which is one of the hedge funds that owns it, is considered an insider given its ownership position, and it has 2 representatives on Carr's board, it likely cannot sell any shares during Carr's current quiet period ahead of the first quarter results. We also note that SRS only has sold shares in Carr once, initially accumulating its stake, that being the sale of 1 million shares in August of 2023. Based on our interpretation of the provision, it's unlikely that Pentwater, the other hedge fund, sells any Carr stock before at least September 20th, due to the potential insider status owning more than 10% of the shares that are outstanding. So, yeah, it looks like this Carr thing is going to continue. I don't know if that means it's a good buy right here, but it does mean that potentially you're not going to see a dramatic decline easily if the 2 institutions that own it are essentially considered insiders and aren't allowed to sell it. Are they not allowed to dilute? That's a good question, because if I'm the board of directors of Carr, why wouldn't I issue at least, I don't know, a couple $100 million? It will get swallowed up really quick, right? That's a good question. Yeah, well, the hedge fund, though, SRS, has 2 representatives on the board. Usually to dilute, you need board approval. And if those 2 representatives don't vote for the approval to dilute, then maybe that doesn't allow them to easily do it. It's kind of crazy, dude. This institution probably doesn't give a crap about Carr stock. They just love that the squeeze is happening and they're just waiting for their moment to get out. But because they have board representation, they have a lot more control to navigate it. CoreWeave right there, 117, Oracle 181, Bitcoin 76,200. As that is also still green. What is Carr? It's a rental company for cars, which we're forced to talk about because it's pulled a 7x in less than a month. TSM not getting any love even after those earnings. A lot of these smaller semiconductor names made a move, but not TSM. Can they resign from the board and sell? No, because they would still have 10% ownership. So they would still technically be an insider. Like as soon as you get 10% ownership of a company, you have to file a form with the SEC, especially if you're not like C-suite. And the SEC needs to know that you own 10% of this, and like the public needs to know. So at this point, if they're owning almost 50% of this, the float, or I should say 80% of the float, then they can't easily sell that. Navitas is up because they hired a Broadcom director. That's why Navitas is up. Some stats on the semis. So SOX, which is your semiconductor ETF, 34% in the past 14 days, best run since 2002. It's 42% above the 2000 .com bubble peak of 0.95 on its ratio relative to the S&P. It's at the SOX over the S&P is at 1.35, an all-time high, which is 42% above the .com bubble peak of 0.95. And it's rallied for 14 consecutive trading sessions, the second largest in history. It's on track to exceed its record 15-day stretch set in 2014. It's up 1%, which means if it continues green today, it'll be the longest stretch in history. So people are piling into the semis. People are piling in to the semis. Cars unhalted. Let's see where it goes. And it's going up. It's going up. 740 here. As that is green. Yeah, 100 terawatts, 100,000 gigawatts, dude. That is just incredible. Kevin Warsh still not live yet. Let me pull up that SpaceX report. But my goodness, if Elon's talking about 100,000 gigawatts a year. You know, but see, here's the thing. Here's the other thing about this. I think this also is part of the story. Like, it's probably unreasonable. Like, my gut reaction tells me it's a little unreasonable to assume 100,000 gigawatts of compute from space-based data centers in a year. But if retail investors see that that's his incentive and they believe he can execute on it eventually, they might just buy the stock anyway, right? So, I mean, this is kind of what happened in 2018. Absurd expectations. Retail was like, well, if he does it, he's going to make us all rich. They took a chance on him. He did it. A lot of retail got rich. What if that's the same playbook? Now, Tesla was not at a $2 trillion valuation at the time. It was at $50 billion in 2018. But, and that's a big but because valuation is a little different here. But if the same sort of qualitative analysis applies, which is that Elon is going to take us to the moon, literally, then maybe you take a chance with the stock. And maybe that's what gets retail back in. Car at 711, S&P also at 710, pound right there, 148.32. OSS up 1.28%. Poet is up because Marvell got a big deal with Google. Poet's one of the suppliers for Google in the optic space. Also, there's a high short float, so probably getting a bit of a squeeze right there. And that's why that stock is green. Rocket Lab back to 90. Did we cover the Lilly records this morning? What happened with Lilly? Why is Lilly down 3%? I know they did an acquisition yesterday. Oh, is it because of the Amazon GLP stuff? I mean, look, I think Hims is more susceptible to Amazon's GLP over Lilly. But obviously that could affect Lilly. as well. Probably why Novo got hit. Is Warsh there? He's speaking. Okay, Warsh is live. Here we go. Kevin Warsh, the potential.
Home pay will accelerate. I share the president's confidence in our country and its people. America's economic growth potential is rising as we sit here today. I'm also especially happy that my wife Jane is here. She's been with me for many of the most important moments in my life. I'm grateful for her love and her personal accomplishments. I reciprocate that with somewhat of my own love, though I'm a little more stoic than she. And about every 20 years, I reintroduce her to this committee. She sat behind me 20 years ago, and it was almost 20 years ago to the day. And so let me offer today what I said then. Jane, happy anniversary. I'm also thinking of my late mom and dad. They were paying great attention to this hearing 20 years ago. They're no longer with us, but I was always proud of them and the values they taught me, and I hope they'd be proud of me today. We start today with a note of broad agreement, even though we might have heard different narratives at the outset of this hearing. This is a time of great consequence for the nation's economy. As a former Fed governor and friend or colleague of the last 5 Fed chiefs, from whom I've learned plenty of lessons, I'm particularly alert to the challenges and opportunities confronting the institution that I cherish, the Federal Reserve. To the president, to the Congress, the nation, I owe my best judgment and my most faithful efforts in serving the mission that you and Congress assigned to the Federal Reserve, including full employment and stable prices. The American people are counting on the Fed to deliver on its commitments, perhaps now more than ever. The real highlights of my life are not on my resume, as Senator McCormick said. They include the individuals with whom I worked and from whom I learned. I graduated from high school in upstate New York. I had some exceptional teachers there and some brilliant classmates. I've learned we're lucky in life if we start out with good influences in learning and in character. A public school education gave me both of these, and I'm grateful. I made my way to Stanford and found myself in the company of some of the most highly accomplished economists and policymakers. George Shultz, former Secretary of State and Treasury, was among the great patriots at the Hoover Institution, who I came to know as a teacher, mentor, and friend. He passed away right after COVID at age 100, but I still feel him with me. I could not have imagined a better formative experience than working from and learning from folks like him. I could tell you about all the things I learned, but maybe the most important was to be around people completely devoted to the ideas and ideals of our country. Silicon Valley in the early 90s, another fitting backdrop for all the things we confront today. I found myself in the right place at the right time. The US was at the vanguard of a new era of technological leadership, and I just looked out my door to see it. Now, in the last 15 years, I've gained deep experience in macro and in markets, working with Stan Druckenmiller. He never held a position in government, but is no less a patriot. He never got a PhD in economics, but I don't know a finer economic thinker. Without their guidance and the guidance of Condi Rice, my friend, and I should say my boss at the Hoover Institution, I doubt I would be sitting before you today as the president's Fed chairman nominee. But I'm certain of one thing. Absent their tutelage, absent their example, I would not be as prepared for the urgent, mission-critical task at hand. In between these bookend experiences, I served quite a while ago as a governor at the Federal Reserve. At the onset of the financial crisis, as Senator Warren said, our central bank played an indispensable role, and we benefited enormously from the credibility that our predecessors had built up and passed down to us, governors of the Fed at the time. In these unusual and exigent circumstances, I saw the Fed and its people at their very best. But I also witnessed an institution that was tempted to play a larger role in the economy and society. So let me be very clear. monetary policy independence is essential. Monetary policy makers must act in the nation's interest. Their decisions the product of rigor, deliberation, and unclouded decision-making. And as Senator Warren said, I do not believe that independence of monetary policy is threatened when elected officials state their views on rates. Fed independence is up to the Fed. That has three implications. First, Congress is tasked with the mission to ensure price stability. Inflation is the Fed's choice. Second, Fed independence is at its peak in the conduct of monetary policy. And third, as the chairman said, the Fed must stay in its lane. I'm committed to ensuring that the conduct of monetary policy remains strictly independent, equally committed to work with the administration and Congress on non-monetary matters that are part of the Fed's remit, and I commit myself to accountability. Finally, I'll just say this, Mr. Chairman. Milton Friedman had a phrase that always stayed with me. He always worried about government officials that lured and hung around with what he called the tyranny of the status quo. Status quo practices and policies are especially harmful when the world is changing this fast. If confirmed as chairman, I will be faithful to the Constitution, to the Federal Reserve Act, and to the very best of the Fed's traditions. I believe a reform-oriented Fed can make a real difference to the American people. And if confirmed, I will seek to create an environment in which the best people do their best work. Candor and goodwill will go a long way in pursuing those objectives. And I suspect this hearing, Mr. Chairman, will put us to the test. It's a real privilege to be here.
Thank you, sir. I will say that we typically stick to a 5-minute opening comments. And I would encourage all of us to stick with our 5 minutes as it relates to our question and answers. We have full attendance today, and it's going to be really important for us to stick as closely to the 5 minutes as possible. If we go over by much, you'll hear me, which is an indication that you're already over. And I'll do my very best to keep us on time. Kevin, there are so many questions to talk to you about, to ask you about, to be honest with you. And I just want to name a couple of them, and we'll look forward to hearing more on these topics. I will not have enough time to delve into some of the most important issues facing our country. I'll take 2 of those issues and focus my time. I'm sure my colleagues on either side will have a conversation with you and ask questions about AI. The AI future is going to have massive impact on where we go as a nation. It's got a massive impact on your dual mandate as it relates to full employment. Our production may go up while our employment stays flat. So this is
I'm not sure why Larry Fitz is there, but he is. So I don't know. If everyone asking, I have no idea, but I guess he's there to figure out if we lower rates or not.
Reserve. Too much attention has been paid to your balance sheet, and not enough attention has been paid to the nation's balance sheet. And I think it's really important for us to dig into that issue as well. Digital assets, the future of finance in the world seems to have a major component of it being digital assets. The market structure legislation, we don't want your comment on, but the important role of the blockchain in the future is another really important part of the future of our economy. I will spend some time talking about affordability and the importance of the independence of the Fed. One of the things I've appreciated about your previous comments is the importance that you have placed on the dual mandate, stable prices, which typically comes through the form of interest rate changes, as well as promoting maximum employment. I think those two will become more challenging in the current environment. One, obviously, the second one being the AI and the future of full employment. You've criticized the Federal Reserve for getting too big, mismanaging inflation. I'm sure you know the definition of transitory, so I won't ask you, but I got a feeling you know, and some of your predecessors did not. Compromising the independence of the Fed. I think we should spend more time on finance, less time on climate change, on politics, on who is or who's not in charge. I think you would agree on those issues, though I will not ask you. I will ask you, however, that under your leadership, how will you steer the Federal Reserve to address the real life issues of affordability is my first question. And my second question will be about how do you make sure that the Federal Reserve stays out of the lane of external influences?
Well, thank you, Mr. Chairman. There's probably no more pressing question than the cost of living. We know at the Federal Reserve that price stability was an objective that you and your colleagues gave to the Fed. So when over the course of the last several years, especially after COVID, when prices went up to the tune of 25 to 35% for virtually all deciles of the American people, that's an indication that the Fed missed its mark. And we are still dealing with the legacy of the policy errors in 2021 and 2022. Once you let inflation take hold in the economy, it's more expensive and harder to bring it down. And so the fatal policy error going back 4 or 5 years is still a legacy that we're dealing with. We need, in my judgment, fundamental policy reforms to fix it. And while it's true that inflation is less problematic, meaning the rate of change in prices is less severe than it was some years ago, hardworking Americans are no doubt feeling it. I think that means a regime change in the conduct of policy. I think that means a different new inflation framework. I look forward to working with my colleagues at the Fed, if confirmed, to achieve that. I think it means, as you suggested, using tools differently. The Fed has an interest rate tool and a balance sheet tool. My view is the interest rate tool gets in the cracks. It's fairer. The balance sheet tool disproportionately helps those with financial assets. The interest rate tool hits the entire economy. So we need a new framework, new tools, and I'd also say, Mr. Chairman, new communications.
Yes.
I think part of the reason why, after making a mistake in 2021 and 22, the mistake was compounded is the Fed gives its forward guidance. The Fed tells the whole world what their dots are going to be, what their forecasts are going to be. Well, the Fed's human. Then they hold on to those forecasts longer than they should. I think if the Fed were to wait until it gets into a meeting before making a decision, that incremental deliberation can keep the central bank from compounding its errors. I think these are big changes that are needed, and if confirmed, I look forward to doing it.
Thank you very much. Ranking Member Warren.
Thank you, Mr. Chairman. So the Fed has been plagued by deeply disturbing ethics scandals in recent years involving at least 6 Fed officials. So it's critical that the next chair have no financial conflicts, none. You have more than $100 million in investments that you have refused to disclose to ethics officials and to the public. So let me ask, do the Juggernaut Fund or the THSDFS LLC invest in any companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles established by Jeffrey Epstein?
Senator Warren, thank you. So let me first share a point of agreement with you. The Fed has 2 tools. One is its monetary policy, and the second is its credibility. And the scandals that you talked about, the ethics problems you talked about, went to the core of the credibility that has hurt the Fed.
Could you answer my question, please? I asked. You have $100 million in undisclosed assets. And what I'm asking is, are any of those with this outfit that invests in companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles set up by Jeffrey Epstein? It's a yes or no question.
Senator, I have worked tirelessly with the ethics officials at the Office of Government Ethics.
And you have not
come to an ethics agreement with them
and
have agreed, Senator, to sell all of my financial assets, including the Duquesne assets.
Are you refusing to tell us if you have investments, for example, in vehicles set up to advance Jeffrey Epstein? Is that what you're telling us? You just won't tell us?
Senator, what I'm telling you is that those assets that you represent at Juggernaut will be sold if I'm confirmed before I take office and sign the oath of office.
Let me follow up on that. Will you at least disclose how you plan to disclose and divest these secret assets? I'm sure you understand that the public might question your motives if, for example, billionaire Stanley Druckenmiller, who you honored in your opening statement, and who makes a living guessing what the Fed will do next, cuts you a massive check for $100 million. as you take the oath of office to become the new Federal Reserve Chair?
Senator, as you know, it sounds like your fight might not be with me, but the Office of Government Ethics. I have come to full agreement with them and have agreed to divest all of those assets.
I'm asking
especially
you a very
those that you
straightforward
referenced
question,
before I
Mr.
take the oath
Warsh,
of office.
and that is, will you disclose how you divest those assets, or will you just collect a check for $100 million from someone whose whole business is betting on what the Fed will do?
As I said to the ethics officials at the Federal Reserve and the Office of Government Ethics,
I'll
and
take,
they agreed,
I'll take that as a
I would
no
be
as well.
redeeming my
So
assets
Donald
before
Trump
I take
has
office.
made clear that he does not want an independent Fed. In fact, he has said, and I quote, "Anybody that disagrees with me will never be Fed chairman." And he's made clear that you are his sock puppet, saying last week that interest rates will drop, quote, "when Kevin gets in." Yeah, I think they do. Not when economic conditions change, we'll get lower rates. Not when the economy needs it. Nope. He said, when my guy, Kevin Warsh, is in there, we'll get the interest rates that I, Donald Trump, wants. So independence takes courage. Let's check out your independence and your courage. We'll start easy. Mr. Warsh, did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the Federal
I'm just
Reserve.
asking you a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
That's not the question I'm asking. I'm asking, did Donald Trump lose in 2020?
And I'm suggesting you in 2020, the Fed made a huge inflation problem, and you certified the election.
So let me ask you another
out
question.
of monetary policy.
In our meeting, you said you would be
politics.
independent because you're, quote, a tough guy. Those were your words, tough guy. And you will be able to stand up to President Trump. So let's try it again. Name one aspect of President Trump's economic agenda with which you disagree.
Well, Senator, the Federal Reserve in recent years has wandered outside of its remit, wandered into other areas.
I'm asking for something
That's not something I'm
with
prepared
Donald
to do.
Trump on.
If I'm confirmed, the Federal Reserve should stay in its lane.
Just one little place where you disagree with Donald
Well,
Trump.
I do have a disagreement, actually, Senator, with the president. I think even this morning, he said that he thought I was out of central casting. I think central casting, I'd look older, grayer, and maybe show up here with a cigar of sorts.
Quite adorable. But you know, we need a Fed chair who is independent. That's the only way we preserve the independence of the Federal Reserve. If you can't answer these questions, you don't have the courage and you don't have the independence.
I agree with you on independence, Senator.
Senator Rounds.
Thank you. Thank you, Mr. Chairman. Mr. Warsh, first of all, welcome. And I appreciated the opportunity to visit with you personally in the office. I agree with you, and I think Fed independence is critical. And I think that's an item that you and I agree on wholeheartedly. I want to take an opportunity just to kind of perhaps give you an opportunity to respond. I know that the ranking member had a number of items that she expressed concerns with. I'd like to give you an opportunity to just kind of work this way through. And let me just ask you a few questions, and I'll allow you to take the time to fully answer the questions. As I understand, Mr. Warsh, you worked with the career ethics professionals at the Office of Government Ethics and at the Fed to come to an agreement in terms of your dissolution of some of the assets that you as a businessman have. Is that correct?
Yes, Senator, that is correct. I worked with the Fed ethics officials first, answered all of their questions, then with the career professionals, the Office of Government Ethics, answered all of their questions, and then they wrote up an ethics agreement, which is part of the public record. But because I agree with Senator Warren on the ethical questions that have been raised over the last several years by several people that were members of the FOMC, so that there's no question about my independence, no question about the clarity of my financial record, I agreed to divest virtually all of my financial assets, the large majority of which will be divested before I raised my right hand and was sworn into office if confirmed by this body. So I've gone above and beyond, not for any other special reason other than the Fed needs to reestablish its credibility because the conduct of policy depends on it.
So let me just, for the record, the agreement which you have signed clearly states that you have agreed to divest your assets that are in question within 90 days of confirmation if you have not already divested them. That is correct.
Yes, Senator. And in fact, the large majority of those assets will be divested before I am sworn into office if confirmed.
Thank you. The career ethics professionals were the ones that basically had sent your signed paperwork to this committee's chief clerk. I really question whether or not they would have done that if they did not come to the ethics agreement with you in the first place, correct?
Yes, I presume that's right. We had a very good working relationship, and I'm happy to be sitting after the divestiture and cash or T-bills or whatever is the permitted asset so we can get back to the business of fixing the Fed, reforming an institution that has lost its way a bit, that has missed the mark. As Chairman Scott said at the outset, this inflation risk is still something that's being talked about around kitchen tables and boardrooms. My preferred definition of stable prices is a little different than most academics. I believe that price stability should be a change in prices such that no one's talking about it. That's an old-fashioned definition, but I think it's still valid. The sooner that we can reform the institution with my colleagues, if confirmed, the sooner we can ensure price stability, and we can have a new set of leaders atop the institution with high, credible, ethical standards to return the Fed to what it should be. The independence that both Chairman Scott and Senator Warren mentioned, critically important. But independence has to be earned, and it's earned by delivering on the promises, the commitments that the Fed has made. And as the Fed hasn't delivered on those promises, we shouldn't be surprised that we hear politics that are entering the room at the Fed. We need to get the politics out of it so the Fed can focus on its day job, deliver on full employment and stable prices.
It's true that people want to see stability within the Fed, but is it okay for a Fed governor or a chairman to change their mind on a particular policy?
It's more than okay, it's essential. Economics is not physics, it's not math. Frankly, most of us that ended up in the economics business, we started like I did as a math major. It was too hard. So we ended up in economics. In economics, what we need to do is focus the left of the decimal point, not to the right of the decimal point. We need to focus on the big things. And if mistakes are made, central bankers, economic policymakers need to correct them fast. The real mistakes, the mistakes that cause inflation to be persistent, to undermine hardworking American standard of living, and when those mistakes go on.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Senator Reid.
Mr. Chairman, before we start the next question, I ask that we have entered into the record the U.S. Office of Government Ethics certification, which requires that all nominees disclose all of their assets and showing that Mr. Warsh is out of compliance and that he has not met the ethics requirements.
But without objection, I will note, however, that what has been clearly articulated is that he will, according to his agreement with OGE, do what many others have done as well within 90 days, be not only in compliance, but to have divested himself from many assets that are in question.
Mr. Chairman, can I ask? I don't think we've had other nominees who are out of compliance and not disclosing at the time they come before the hearing.
Not on this committee, that's correct.
Not in this committee.
Before we, here's what we're not going to do.
Fair enough.
We're not going to have two chairmen, for sure.
Just ask.
Number one. Number two, what we're also not going to do is debate what we're putting into the record. And finally, what we are going to do is have a conversation about America's economy. And frankly, we all deserve the opportunity to ask our questions. We don't get to figure out the answers, but we do get to ask our questions. And I hope that we are able to continue in that direction. As long as we are, we're going to have a very good hearing. And if we're not, then I will find a way to help us to expedite getting back on track. Senator Reid.
Thank you very much, Mr. Chairman, Mr. Warsh. Until you dispose of all the assets you've identified to the Office of Government Ethics, you will not be in compliance. Is that correct?
My understanding is that a signed ethics agreement provides duties and responsibilities on me and duties and responsibilities on the government. And that's what the nature of the ethics agreement is.
You have an agreement that within 90 days, you will dispose of all your assets. Is that correct?
Senator, I have an agreement within 90 days so that there is no appearance of anything inappropriate, that I would divest all of my assets, the majority of which before sworn in. What I've disclosed, Senator, is all the information that is mine to disclose. I've shared all information about assets that I control and that I can share, which I did much to the satisfaction of the Government Ethics Office.
Excuse me. What you've said is that you will take the oath, if confirmed as chairman, with assets that have already been identified as presenting potential conflicts of interest. Will you agree to not take the oath until you have fully disposed all the assets that you've been identified?
Senator, I'll agree to take the oath pursuant to the terms of the ethics agreement that I struck with the Office of Government Ethics. I don't think anyone could do more than that other than me. I've agreed to divest even more assets, that I will have virtually no financial assets.
The divestiture is totally up to you. You can select what assets you're disposing of, what assets you keep. Is that correct? And then still be sworn in as chairman.
The divestiture is up to the agreement that I struck with the Office of Government Ethics.
Who makes the decision as to what assets are divested, you or the Office of Government Ethics?
Both of us. That's why it's an agreement.
Excuse me. I must commend you on the way you can circularly go around questions and not answer them. It's a skill. Unfortunately, it's not a good skill for the chairman or of the Federal Reserve Board. We typically ask questions and expect to get direct, faithful answers. You haven't given them to the ranking member, and you're not giving them to me. So again, you feel you will not be, you will be compliant if after 90 days, you still have a significant number of assets that have been identified as presenting conflicts of interest. Is that your view?
No, Senator. If I were to violate the ethics agreement, I would not be in compliance. If I follow the agreement, I will be.
Well, that's your position. I think others would differ. When you sell all your assets, where are you going to place the proceeds of those sales? I believe that Chairman.
What's obvious here is that people really care about his net worth, which is almost $200 million, and his financial disclosures, his conflicts of interest. This is the wealthiest Fed chair we would ever have if he does get nominated. So this seems to be the biggest thing people, at least the senators, care about.
Powell has placed them in.
I haven't selected anything, but it will be as plain vanilla as possible so that there would be no appearance or reality of having any influence. We'll be sitting in something like cash.
Okay. Now, the question of independence is just one that I think will dominate these proceedings. This morning, President Trump was asked on CNBC, will you be disappointed if your new Fed chair doesn't cut rates right away? And President Trump answered, I would. It's very hard to separate President Trump's obsession with rate cuts, his attacks on the Federal Reserve, on Chairman Powell particularly, and your nomination. So this independence thing seems to have evaporated quite quickly between President Trump's statements and your positions. Again, you maintain you'll be independent of President Trump?
Yes, Senator, I do.
Well, President Trump constantly maintains that nobody's independent of him, that it's his morality that guides the whole United States government, including the Federal Reserve, and that you will be someone who will carry out his wishes. Frankly, do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
you're going to cut. I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed. Fed
That's
leadership
nonsense.
has to make a decision about what's the right thing to do.
No,
in my judgment,
you're a leader. You're the leader. You establish the moral and ethical standards and economic principles of the Fed. And you just pass it off to, well, you know, it's not my job, it's everybody's job. That means it's nobody's job. Thank you.
Senator Tillis.
Mr. Chair, before my time starts, can I make a parliamentary inquiry?
Certainly.
I want to make sure that we get this right because I'm not an attorney, but I think it's pretty important to suggest that according to Mr. Warsh, he has signed an agreement that is in compliance provided that he executes the agreement.
Correct.
So we should not have into the record that he is before us out of compliance because you stipulated that what Senator Warren said was a first of a kind here, but he is not out of compliance. He has agreement that if he executes will be in compliance. That's why he's properly before us. And I just want to make sure for the record that that is clear.
Yeah, very clear. Let me just say it. I'm going to reiterate what you just said, but I was writing it down myself. The Office of Government Ethics has entered into an agreement with Kevin Warsh that he has up until 90 days after confirmed to divest of his assets.
So the word, I mean, to non-attorneys here, I heard someone say he's before us out of compliance, and that's why I checked with the staff to be absolutely certain he is properly before us. He will be in compliance if he executes agreement that addresses the concerns that have been presented by some of my colleagues on the other side of the aisle. I just want to confirm for the record that that is in fact accurate.
So if we're doing a matter here of, is this parliamentary inquiry? Is that what this is?
I've made a parliamentary inquiry, so I'm not burning my time on something
I
that I thought
understand.
felt like a cheap shot to say he's out of compliance when in
Then-
fact he's not.
Then I'd like to ask the other question, and that is, have we seen this agreement? Do we have any way to verify that, in fact, these sales will occur if we have no idea what's in them and no one has told? And let's do remember the law for a minute. The Fed, unlike other parts of government, do not have a 90-day you can be out of compliance. Fed law is explicit that you cannot own any portion of a financial interest in a bank.
Mr. President, Mr. Chairman, excuse me for interrupting. Senator,
Now I'm going to let the attorneys take
are
over.
we going to all get extra time here?
No.
I'd like extra 3 minutes.
All right.
Okay.
Mr. Chair, I just, for the record, and the only reason I said
That was a parliamentary inquiry, so it doesn't count.
Yeah. But
Okay.
Mr. Chair, the reason I mentioned that is because you had stipulated it. I don't think you meant it this way, but you as a chair said that this is the first of a kind of someone being out of compliance. I don't think you meant that. I wanted to make sure it was clear for the record.
Well, let me just be very clear again. The career ethics professionals were the ones that sent Mr. Warsh's signed paperwork to this committee's chief clerk. They would not have done so if they did not come to an ethics agreement with Mr. Warsh. Mr. Kennedy, Senator Kennedy does raise a good point. We are going to stick to our timeline, and I appreciate you raising the point of how long an inquiry can go on, and that does not buy you more time unless, of course, we all decide we want more time. And then I would rule on that, and I would rule against it.
Thank you, Mr. Chair. Mr. Warsh, congratulations. You can't count this as a date with Jane, particularly this one. I think probably the first hearing was a little less acrimonious. I'm not going to ask you anything. You can take a break and get ready for the bludgeoning on the other side. They're going to beat you till you bleed, and then they're going to beat you for bleeding. I'm going to talk about what's preventing me from being in a position to vote for you until we've spent time together in my office. You have extraordinary credentials. They're impeccable. I think the way you're dealing with the ethics issue is strong. Problem I have is where we are right now. And I start by saying, I loved your opening statement. I love your focus on the independence of the Fed. I love the idea of Fed independence with respect to achieving the dual mandate, but Fed transparency on so many other things that the Fed does that, frankly, we're all frustrated with, bank examination, supervision being some among them that I think we should have more insight into. Mr. Chair, I'd like to submit for the record 2 executive orders under President Trump, one in 2020 and one in 2025, talking about making federal architecture beautiful again, and focusing on trying to preserve the integrity of old buildings.
Without objection.
Thank you. And Mr.
The reason we're likely going red is because, once again, the market really cares about Fed independence. And based on Kevin Warsh's answering these questions, maybe the market's interpreting this guy as not the most independent. And as a result of that, even if it's like a short-term jitter, the market is going to test this Fed. And if they don't think he's independent, then they're going to be afraid of, if they can trust his perspective on where interest rates can go.
So I'm naturally wired to go back from the ground up and figure out what the deal is. Here's what I know. The Martin building has been conflated into this project to make it a $4 billion building. Even if you put the Martin building in, it's a $3 billion building. The reality is what we're talking about is the Eccles building and the East building, for which, bring that up higher, Jack, you're a tall guy so people can see it. These are the overruns. And these overruns occurred in part because the cost of inputs went up 69% since the original estimate. Asbestos was identified. Remediation was required. Pylons had to be built underneath the building because it turns out they used it as a landfill and they had a water table issue. There were a variety of reasons why this building went over budget. And as a matter of fact, if we put everybody in prison in federal government that had a budget go over, we'd have to reserve an area roughly the size of Texas for a penal colony because of the way government projects work. And the reality is the overage of inflation adjusted was about $730 million, the majority of which seems to be legitimate. Next slide. Not acceptable, unfortunate, but legitimate. Now, what I've really got a problem with, and we're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you, at least a majority. It's a consensus organization. You try to get the majority to. Most of these votes are 11-1. So if anybody thinks the president can appoint somebody and you unilaterally can control things, you're going to be an unsuccessful chair if history is any guide, and you've served under some of the best. So I know you're going to do it right. The problem that I have here is that we had some U.S. attorney with a dream or assistant U.S. attorney thinking it would be cute to bring Chair Powell under an investigation just a few months before the position was going to be open. This happened this year. Normal course and speed. Here's how it works at the Fed. May the 15th, the term would have expired. We'd be having this hearing. You'd be getting confirmed. Custom also suggests that the sitting chair, even though he has 2 years left on his term, would have exited. But instead, we have somebody who thinks a building project that went over by about $700 million with a lot of what seemed to be justifications for it are holding up this whole process. It sounds like to me somebody over in the DOJ didn't even check with the boss. The boss said on the same night that I said I can't go forward until this bogus investigation is done with, said he didn't know anything about it. So we've got people in DOJ over in the DC circuit or the DC district doing these investigations. We have got to end this investigation. Big DOJ didn't know about it. The president didn't know about it. Let's get rid of this investigation so I can support your confirmation. Mr. Warsh, the only thing I've found the least bit odd about you is you've never watched an episode of Seinfeld. You've spent so much time at being a rock-solid economist that you're not even taking time away for a little laugh like that. I look forward to supporting your nomination, and I look forward to this investigation being taken down. If the chair
wants to have all of our subcommittees start looking at capital expenditure projects for the agencies that we're overseeing. I think that's a great idea. And I'd like to be on a committee specifically drilling down on this analysis. If somebody can prove me wrong, I'd be happy to make a criminal referral. But I don't have the DC Circuit tell me a crime was committed when 7 members on this committee said it wasn't, including the chair. Thank you, Mr. Chair.
You're welcome. Only one question. What is Seinfeld? Senator Van Hollen.
Mr. Chairman, thank you.
Market could also be dumping because there is not confirmation from the Iranian side on attending the Islamabad peace talks. I believe the delegation is there, but we don't have confirmation if they will participate in the talks. At least that might be the speculation here. So that, along with the market questioning Kevin Warsh, could be why we're going red right here.
Since the Great Depression, with some of the worst unemployment in our lifetimes, you were a hawkish voice, expressing concern that the Fed might wait too long to raise rates. I think you got it wrong then, but now you seem to have swung 180 degrees in the opposite direction to embrace lower rates, a view that conveniently aligns with the president who nominated you. You've made this pivot even as today prices are too high. I think we all know that. Our economy works for families when prices are affordable and unemployment is low. That's why price stability is an important part of the Fed's mandate, right?
Senator, yes.
And the Fed uses its monetary policy tools for price stability and full employment. That's the job Congress gave to the Fed. Here's how Ben Bernanke described how the Fed uses those tools. He said, and I'm quoting, generally, if economic weakness is the primary concern, the Fed acts to reduce interest rates, which supports the economy. If the economy is overheating, the Fed can raise interest rates to constrain inflationary pressures, end of quote. So that's a textbook model of the Fed. Cutting rates supports the economy, but can lead to higher inflation, while raising rates helps to fight inflation, but can limit growth. Do you agree with Chairman Bernanke that that's generally how the Fed can use monetary policy to affect the economy?
Senator, I do agree generally with that proposition, but I'll note at a moment like this, the supply side of the economy is changing dramatically. So the core of what Chairman Bernanke said is a question about what's the economy's potential. As I said in my opening remarks, I think the economy's potential is growing quite quickly, and that makes the decision that you tee up to be a difficult one, and one that the Fed's going to have to dig deep in evaluating what's the right policy choice in the upcoming meetings.
Well, I want to push you a little bit on that in a moment, but right now the Fed has set its main interest rate at 3.5 to 3.7%. Last December, President Trump told the Wall Street Journal he wanted to cut rates to 1% and maybe lower than that by the end of this year. So just to better understand how you think about economics, in the economic model Bernanke laid out, let's say there's an economy with decent growth and no recession. If the central bank were to cut rates from 3.5 to 1% or lower, a massive cut, that would typically push prices up, right?
Senator, unlike many of my colleagues, past and present, I don't believe in forward guidance. I don't believe that I should be previewing for you what a future decision might be. I think it's essential that the Fed make decisions in the room.
Mr. Warsh, I'm not asking you what decision you would make. Obviously, that's going to be up to you. I'm asking you for the framework in which you think about these things. And it seems a pretty straightforward question about what would happen if we reduced interest rates by the end of this year to 1% or less. And under the Bernanke model, and I think almost every economist or most economists would say that that will drive up prices. And so that's what I'm asking you. Would you agree that that would likely drive up prices?
So, Senator, the Fed has two important monetary policy tools. One is interest rates, and the other is a balance sheet that we created in the 2008 financial crisis. Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one variable when we'd have to have a discussion on the other.
All right.
Sorry.
Well, let me just say this was a pretty clear question about the framework in which these decisions are made. I have heard you talk about how AI may change that calculation.
Yes.
I will just say, and I think you know this, I mean, I have this, you know, the Financial Times pointed out the economists reject Kevin Warsh's claim that the AI boom will enable rate cuts. And I find it just implausible to suggest that by the end of this year, AI would produce such increases in productivity that it could reduce in a rate cut to below 1%. And you can't tell me that that would very likely increase prices.
So, Senator, can I say two things? First,
Senator,
sorry.
Quickly.
Sorry. Monetary Policy Center works with long and variable lags, quite famously. If the Fed were to make a decision today about the conduct of policy, it's likely to find its way to the real economy 6, 9, or 12 months later. So it's difficult to judge policy today for an immediate result. And that would be my only concern about the framing of your question.
Thank you, Mr. Chairman. I just, in closing, this is what concerns me, is that your views now have sort of flipped to conform with where the President of the United States is. And that's been a concern many of us have. Thank you, Mr. Chairman.
Senator Kennedy?
I want extra time, Mr. Chairman.
I know,
Consider these 5 minutes of parliamentary inquiry. Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know. I think
Okay.
it's that thing you stick your hand in.
Yeah, kind of like this.
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend, Senator Warren, and she, as my friend, suggested that, I wrote it down, you will use your power, you might use your power to bail out your friends if they get in trouble, kind of like President Biden did with Silicon Valley Bank and the Signature Bank. She didn't say the last part, I just did. Are you going to do that?
No, Senator.
Okay. The ethics folks, they've cleared you, but they said you got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you?
No, not for most of them, sir.
Okay. So it takes a reasonable period of time, right?
Yes, sir.
And you've promised to sell them, right?
I did.
And if you don't sell them, we'll know, and the ethics folks will know, right?
Yes, I'd be in violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates.
Okay.
Humble central bankers should be listening and then making their own decisions.
But some politicians matter more than others. And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he has not made his opinion on that a secret to anybody.
Yeah. And every president has, that you're aware of.
Yes, and they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility as Fed chairman is the most important thing you have?
It's the most important thing to me. It's the most important thing to the institution, and it's the most important thing to the successful conduct of policy.
Okay.
If the markets,
that's a yes, right?
Yes, Senator.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter. I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or did happen?
The president never once asked me to commit to any particular interest rate decision, period. And nor would I ever agree to do so if he had, but he never did. I was honored he nominated me, like everyone else in the committee.
Who believes him? Who believes him?
In the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay. I've got one more question because I'm about to run out of my parliamentary inquiry time. I've heard your argument the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem. Therefore, rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you've said what I just said, haven't you?
I have said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI,
okay, let me stop you because the chair's going to cut me off.
Oops, sorry.
Here's my worry that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there.
Yeah.
Thank you, Mr. Chairman. I'll get to my 5 minutes in a little bit.
So you come back about midnight, sir. We'll go ahead and start all over.
Market's getting a little recovery. Oil still getting the spike, folks. I guess it's based on this idea of Iran potentially not continuing the war or not continuing to negotiate. But you're seeing oil still get that 91.40 handle right here. S&P, very small bounce from the lows at 706, still at 707.41. But at least you do have a bounce, which is better than nothing right here. So, I mean, a majority of these questions are primarily rooted in how the Fed is, or how they are concerned about his Fed independence, which I guess is fair given he is super rich. But that seems to be the most important questions they're asking. They're not really even asking him about anything else other than his potential liabilities here. Oil right there, 91.40. S&P 707.54 as that continues to be green. Tesla 391, PayPal's up a little bit, ServiceNow still up. A lot of names that had a pump today are losing it. Car went from 750 to 662. And you're trying to see some of those names still come back. What is Powell's net worth? I'm not sure, but Warsh is closer to 200 million. So obviously he does own a lot here. I am trying to get back to this Warsh hearing. CNBC is not loading. Give it a second. I think it just needs a minute and then it should be able to load. Gold and silver also coming down. Okay, we should be back now. Here we go.
Inflation has been running at about 3%, a full point above that Fed target, correct?
Yes.
And so some Federal Reserve officials have said that this excess is due to tariffs. Do you agree with that?
Senator, I don't. If I can make 2 points.
Please.
Much as we discussed in your office, I think the data that's being used to judge inflation is quite imperfect data. And among the projects that the economics profession, and if I'm confirmed as chairman of the Fed needs to do is to try to use our new understanding and new data sources to see what's really the inflation rate in the economy. We used to use core PCE, core measures. So we'd exclude food and energy because it was sort of a rough swag as to what was going on. We don't have to do a rough swag anymore. What I'm most interested in is what's the underlying inflation rate, not what's the one-time change in prices because of a change in geopolitics or a change in beef, but what's the underlying generalized change in prices in the economy. And my broad sense is that these inflation risks and the inflation damage the last several years is improving somewhat. It has improved somewhat in the last year. The measures I prefer are looking at things that are called trimmed averages, where we take out all of the tail risks, all of the one-off items, and we ask ourselves whether the generalized change in prices is having second-order effects on the economy. Again, they're not where they should be, but I think that the trend is quite favorable.
And these trend averages and the data that you're looking at now, it's not traditionally the norm that economists would use in this position. Is that correct?
Some in economics profession are increasingly looking to these median type measures, but among the projects I would hope to undertake as one of the first reforms at the Fed is a data project where we would go off and we would evaluate with the public sector and the private sector, including the Bureau of Labor Statistics, a survey of 1 billion prices. And what I'm really most interested, Senator, is what's the change of that 500 millionth and one price? Because that's inflation. That's a change in the generalized level. In a market economy, prices change all the time, and I don't want to be confused by that. I want to know what inflation really is, and I still think there's some work to do.
And I respect, listen, I'm listening to you today and talking with you. I respect you truly believe as an economist and a theorist in this theory, in what you are talking to us today about, which is traditionally not the norm. And many are disagreeing with you on that and publicly disagreeing. And so I understand that. But I guess the position I have is I hope you're right. But at the end of the day, my concern is people are suffering right now with high costs and we need to address it. And I don't know how long it's going to take for your economic theory to gain traction or to be proven that it's going to benefit so many people in this country right now. And here's one other thing, because I don't have that much time. And this is what is also a concern of mine. So I want you to address it. Earlier, you've been on the Federal Reserve Board and you were there during the financial crisis of 2008. You and I talked about this. I was the Attorney General then. It hit Nevada so hard. Here's what I do know. And at that time, in 2006, you attended numerous meetings where housing experts pleaded with you to stop predatory mortgages. In fact, Gail Burks, who was the CEO of Nevada's Fair Housing at that time, who I worked with, repeatedly warned Fed leadership, including you, about predatory lending practices such as flipping loans or misinforming seniors about reverse mortgages. And in 2007, you said, and I quote, subprime mortgages have gotten a bad name in this environment, and in some cases, that's not just. You also said that you don't see any immediate systemic risk issues among big banks. And you said that at that time. And then just recently, and this is what I want you to address, Senator Warren has said that you told her you had no regrets during this tenure. How can we trust that your economic theory, when you were wrong then, is going to be the accurate theory we need now to help so many families and businesses that are struggling with the policies that we're dealing with now?
Senator, let me address a few things. The chairman is going to cut me off when he must, but I would say this. For many years before the global financial crisis, I warned about the very real risks of Fannie Mae and Freddie Mac blowing up, which they did. I think that part of the housing market was vulnerable for many years, and not enough was done about it, even in spite of my protestations and my urging about GSE reform. It wasn't done. I think that compounded the financial crisis. Secondly, I think subprime mortgages then, subprime assets then, were indicative of prices of almost every financial asset that were mispriced. What I suggested then and what I believe now is that subprime mortgages were just indicative of a set of prices that were incorrect, and they all repriced. Just to give one fine example before I turn to the chairman.
Perhaps no examples right now.
Okay, sorry.
Let's go to Senator
Thank you.
Haggerty. I want to give you the opportunity to finish that exchange.
Thank you, Mr. Chairman. And Mr. Warsh, I want to welcome you and your family. And I want the committee to know that I've known Kevin Warsh for 30 years. We first crossed paths back in 1992, shortly after Kevin graduated from Stanford. We both worked on the White House staff at that point in time. And I just want to say this, that the man testifying before us today is the same man that I got to know then. Serious, disciplined, with a true heart for public service. And I want to say this, I've said it before, Kevin Warsh is the man for the moment. His background, his experience, and his discipline are precisely what we need to bring our economy into its full potential. I'm delighted to see him here today as we both reinforce competence here at home and do the same thing abroad. And if I think about Kevin's qualifications, think about the contrast with the nominations that we saw with the last administration. I think this committee will recall that President Biden nominated a prospective federal bank regulator, frankly, a graduate of Moscow State University in Russia, who advocated for replacing private bank deposits with retail accounts held at the central bank. Those who might criticize Kevin for his private sector success miss the point. Kevin's experience is not a liability, it's an asset. It brings a practical understanding in terms of how markets function to bear, how capital is allocated, and how policy decisions shape the real economy. Mr. Warsh, how will your experiences in both the public and the private sector shape your governance of the Fed should you be confirmed?
Senator, thank you very much, and thanks for the kind introduction. For your colleagues on this panel, Senator Haggard and I shared a desk, 91 and 92, so I've known him for a very long time. I think my prior experience at the Fed, which some of your colleagues made reference to, are going to allow me to hit the ground running. This is as consequential a moment for the U.S. economy and frankly for the institution as any point since the late 1970s. And so my experience at the Fed, my understanding of the people, the culture, the governance, and of the things that are ripe for reform are going to give me a leg up. We don't have a long time to do new studies and contemplate what reform should be. We have a short window to try to bring inflation back down to where it should be to ensure price stability. And because AI that Senator Kennedy referenced is so consequential, and AI is quickly becoming at something like escape velocity, it's important to revisit the Fed's models and see whether this innovation cycle, while it could have over time improvements in the price level and make the Fed's job on inflation easier, there's a question about what that means for employment, which is another part of the Fed's mandate. So I think that's part and parcel of what my background and suggestion and history would suggest. But if I can make one other point, what the Fed needs is a reform to its frameworks and reforms to its communications. I've seen what the Fed's done well, and often I'll give them one cheer or two, but now more than ever, the Federal Reserve needs 3 cheers, and that's what I hope to deliver.
Well, let's stay on this point, particularly, and you've mentioned this in your commentary, the point of the Fed's mission creep over the years. If you think about what the Fed has done, they've strayed into what I would call politically contentious areas, gone well beyond their core mandate. And we've seen this across the Federal Reserve System. And what the Fed has done is eroded its credibility. It's what it should be, which is an apolitical and independent central bank. In bank regulation and supervision, the Fed's focused on non-material and often politically charged areas. I'm thinking about climate change policy here. Elsewhere in the Federal Reserve System, we've seen regional reserve banks used as platforms for promoting very divisive partisan policies. There I'm thinking about DEI, climate policy, even racial reparations. The Minneapolis Fed even went so far as to publicly lobby for an amendment to a state constitution on education policy. How far beyond the remit can they get? In the 2020 Monetary Policy Review, the Fed even sought to redefine its legislative mandate of maximum employment as a broad-based and inclusive goal, close quote. I mean, that's tacitly understood to mean that the Fed should accept higher inflation to privilege select groups of Americans. And while the Fed undertook this social engineering, it also financially engineered a massive footprint in our market. QE provided near unlimited bid for government debt, which of course made it easy for us to subsidize more government debt here, subsidize government financing, and it encouraged, frankly, what I view as very reckless federal spending. In each of these examples, we see a clear pattern. The Fed has strayed beyond its core mandate to encroach upon policy decisions that ought to be left to those of us that are democratically accountable. Mr. Warsh, the Fed's own actions have eroded its credibility. What do you think should be done to regain public trust?
Senator, robust reform. The Fed can deliver on the mandate that you gave it if it sticks to its knitting. As it wanders into areas upon which it has neither authority or expertise, it loses its focus. And I'll just give one example. In 2020, as you reference, when the Federal Reserve changed its inflation framework in August of 2020, inflation was running at around 1.72%. And the Fed changed its framework, rewrote in some sense the remit you gave it, and they asked for a little more inflation. They ended up with a lot more, and that was the foundation for the inflation surge that happened in the subsequent years, which we're still living with.
Thank you, Mr. Warsh. Thank you, Mr. Chairman.
Senator Smith.
Thank you, Mr. Chair. Good morning, Mr. Warsh. It's still morning. Let me start with this. I think you have said that you have confidence that this economy has potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most significant hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that. And I actually want to go a bit further because I think that it seems to me that this economy is amazing.
Vance has not left DC for Pakistan. I thought the reporting we got this morning and from Trump himself on CNBC was that Vance left. Apparently, he has not left. We're getting reports he's still in DC. Theoretically, we don't know if he's going to go yet. There was some dispute over the weekend on if he's going to go or not. So I think that's another reason markets are a little curious. Like, why isn't Vance heading to Pakistan yet?
Amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate of the previous 5 years. And wealthy households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces right now. And I can tell you that in Minnesota, a lot of people are telling me that it is harder and harder for them to afford the basics. They aren't rich. They don't have enough money to pay their bills, to pay their doctor's bills. So I want to look at this with you for a few minutes, and I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel. So understanding what you've been saying about data and measurement and all of that, let me just ask you, do you think that gas prices going up 20% is fake inflation?
Senator, the gas prices like beef prices, eggs, milk, and the rest, they move. And when they move in the wrong direction, American people are hurting by it. There's no question about it.
That's right. American people feel it. It's not fake to them. It's money that they don't have in their pocket because gas is up 20%. I think my constituents would say that that inflation is real and not fake. Okay, so let's look at unemployment. At the State of the Union, the president said, quote, the roaring economy, excuse me, this is the quote, the roaring economy is roaring like never before. So do you agree with that statement? Is that how you see the economy, that is roaring like never roaring before?
So Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more. And I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, there was almost 0 job growth in 2025. And so that looks to me like not a roaring economy. It looks like a weak economy, which is what my constituents are telling me back in Minnesota. Let me go to one last look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota, not a coastal state, premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, tornadoes, hurricanes, climate change. So is that inflationary in your perspective? Is that increase in home insurance, property and casualty insurance, isn't that inflation?
So, Senator, if I can answer two questions that I think I heard, and we talked about both of these in your office. We look at the payroll numbers every month and we ask ourselves whether it's good or bad. The job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at healthcare, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point here is that rising home insurance rates caused by increasing extreme weather events, climate change is another inflationary pressure that people in my state are dealing with. And this, of course, the reason I'm focusing on this is because I'm worried that because of the pressure that you are going to be under from the president to lower interest rates, that this inflationary pressure that my constituents are feeling is going to get worse and not better. And so I don't have time to ask my last question, but it is literally this. The president has said that he demands that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.
Yes, ma'am. Senator Lomas.
Thank you, Mr. Chairman. Welcome, Mr. Warsh, and congratulations on your nomination. And thanks for appearing before this committee, and taking both the positive questions and some of the hostility. I apologize for my colleagues' behavior when it strays outside of decorum. My first question is about the balance sheet of the Fed. What is your view about the size of the balance sheet currently?
Thank you, Senator. As we talked about in your office, the Fed balance sheet has played a particularly, I think, unhelpful role in helping the Fed achieve its dual mandate. The senator had just mentioned what she described as the increase for financial assets relative to real assets. Well, part of that is the Federal Reserve. The Fed is not blameless in that as it's grown the Fed's balance sheet, grown its imprimatur on the economy, those with financial assets have benefited from it. The reason why I prefer monetary policy to use interest rates as the dominant force is interest rates affect a far broader cross-section of the economy. Interest rates get in the cracks. If we were to cut rates, then broader number of people will benefit from it versus quantitative easing, which tends to move through financial assets first. Half of our fellow Americans don't own any financial assets, so they're wondering what's in it for them. Broadly speaking, Senator, on the balance sheet, I was involved in 2008 and 2009 in response to the global financial crisis that Senator Warren referenced, and we used extraordinary measures and created a bigger balance sheet. But we agreed to do that only in the times of emergencies, only when interest rates were pinned to zero. The big balance sheet has become an ordinary recurring force, and I think has been quite unhelpful, and is part of the reason why the Fed is in the business of politics. Slowly and deliberatively, I believe we need a smaller central bank balance sheet. It took us 18 years to create this big balance sheet that's done quite a bit of harm, it strikes me, to the Fed's credibility. Working with the Treasury Secretary, we're going to have to find a way in which we can take the balance sheet and make it smaller, because a large balance sheet where the Fed owns more outstanding debt than many parts of the financial markets, that's fiscal policy in disguise. Fed needs to get out of the fiscal business, focus on the monetary business, so the Fed can deliver on the remit you gave us.
Thanks for that response, because some of us don't appreciate the connection between the size of the Fed's balance sheet and interest rates.
Okay, guys. I think I'm gonna have to end it there. If you want to continue watching it, I'll put the YouTube stream right here in the chat. People can watch it. Ultimately, I think they're gonna keep grilling him for the next couple of days right here. There's the link right there, so you guys can watch it. Around independence of the Fed. Market was dumping. Now it's not dumping as much. S&P, well, is not at the low of the day at 706.64. Let's see if the bulls can come in and take control right here. Obviously, the market is a little worried about his independence, and that was to expect it. I mean, the market's not going to let him easily just get through being the Fed chair without showing some hiccups. Oil spiking, I think, is more a result of Iran and the United States not officially starting their negotiations via their delegates in Pakistan. I really did not know that Vance was still here. Vance is, I mean, I thought we heard Trump this morning say Vance and Witkoff and Kushner are in Pakistan. So maybe I didn't hear him correctly, but if Vance is still here, I think the market's just wondering who exactly is negotiating. Is the negotiation happening? You have the Iranian parliament coming out saying that we're not negotiating. And then you had Trump this morning saying they are negotiating. Oil's at 93. That is obviously based on the uncertainty of if these negotiations are happening. Obviously, if they don't happen, it's not going to be good for anybody. Stock market's probably going to go down. Oil's going to go up. Not going to be fun. So we really need to hope that's taking place. AMD getting a nice little move right there. 2.3%. AMD is up. Apple again. Tim Cook stepping down. I guess that's your main reason why it's down 2%. Yeah, the Iranians said they're not negotiating, but there's different factions of the Iranians because you had the AP report come out at around 9:20 that said, I mean, I read it live, that the Iranians will be negotiating. I mean, literally, didn't you guys hear me say the exact quote? We look forward to the negotiations. Yeah, right here. In other words, our defense forces are on full alert, and at the same time, we are conducting negotiations. This was from the Iranian government spokesperson at the foreign ministry. So I don't know, because then, yeah, again, when Warsh was talking, which is why I think partly we dumped, you had some other Iranian representatives say we're not going to negotiate. And so I don't think the market exactly knows who to believe. And then you got this Vance news where he's not leaving yet. He's in DC, which is confusing. And so today we're going to need a lot more clarity. But hopefully it's a little hiccup and it's not something that's that much more aggressive. Microsoft up on the day, IGV up on the day, software still doing good, Palantir holding 147. So your software names still holding on. Some of your semi names doing great like AMD. If we end up either flipping green or end up around that 708, 709 level by the end of the day, the bulls are just in control. The bulls are just in control if they're not going to give us a negative, even 0.5% red day, which again, we were used to 0.5% down, 1% down every other day in February and March. We have not even had one in April, at least since the ceasefire began. So it's in about 2 weeks, which means if we continue that would be very nice. Nebius right there, 161. That going green, even with the New Jersey delay. Car up 6%, down from 730. Tesla kind of flat at 390. ServiceNow, great day at 102. Amazon, unfortunately, not getting a pump off that Anthropic news from last night. I mean, it's up 2%, nothing crazy, but it was at 256, now at 252. And you got oil up 4%. Oil can flip down as quickly as oil can flip up. So this is really, I think, driven by headlines here. And right now the headlines are pointing to maybe the negotiations aren't as likely as people think. But if that's just false reporting or that's just misreporting by multiple sources and we actually see that reporting is there, then, or that the negotiations are there, then maybe this ends up flipping, which is kind of what I think is coming out, which is why we're getting that little bounce. Also, we did have 20 million of put premium come into the QQQ since 10 a.m. So you definitely had a little bit more bearish option flow come in, and that's obviously hurting all of tech. Apple right there, 267, down about 2%. NVIDIA still holding 200, though. NVIDIA's been a champ, holding above 200, which is very strong to see. S&P back at 707. All right. That is it for me. I'll be back on the market close. We got our first taste at Kevin Warsh, and ultimately, I think this question about how rich he is and his conflicts of interest are going to be questioned more and more. And we'll have Technical Tuesday, and we will see what Jason's thinking of the technicals, and then we'll see hopefully if the negotiations end up happening, which right now the question is we don't know if it's officially happening yet. Word of the day. I feel like I've seen this word before. Brian says I had 5 cups of coffee watching the show. Now I'm running for 15 miles. I haven't had any coffee, but I think the market keeps us excited enough every single day here. Exigent. I think I've seen this word before. Exigent, demanding immediate action or attention. In exigent conditions, execution matters more than perfection. Exigent.
Exigent.
Okay, a little bit more stress on the X in that pronunciation. Should we spam Steve with Scooter? Dude, that was hilarious. Dude, they were joking. Seinfeld, Scooter. You had so many random things that they ended up saying there. That was quite an entertaining hearing, and I think we're gonna have a lot more of it to figure out who. We got to get used to him. We will be listening to him for the next 6 years. Every word this guy says, we will have to pay attention to. So it is going to be pretty important. Yeah, there's Steve's stream right there. I think he's live. If you want to go watch, you can spam it with Scooter. And then I'll be back on the market close. We'll have Jason, and we'll take a look at the technicals that we got. And hopefully we have better news on these negotiations. I mean, this market could flip so quickly if we get confirmation that we're having negotiations. But we have to see. Reporter from News Nation. I said last night it's still unclear who's going to be in Pakistan to meet VP Vance on the other side of the table. That still holds true today. Iranian Foreign Ministry spokesperson has told the BBC that a decision has still not yet been made for an Iranian delegation to travel to Islamabad for a new round of talks with the United States, which is confusing because this morning they did say that they will continue conducting negotiations. So yeah, I think the market obviously is more likely to go down than go up, or at least stay flat if we don't fully know if the negotiations are happening. One tweet that clears this up, maybe that flips it. That's probably why oil is spiking. But we're going to have to figure out if that ends up coming to fruition. Okay, there you go. That's it for me. Thank you everybody for being here. We're back for the market close. We'll be here with Jason, Technical Tuesday. Hopefully we get some more understanding of if negotiations are taking place. We'll get a better understanding of the Fed new potential chair, as we'll get a lot more questions, and I'll try to recap the summary of some of his answers. And we'll keep going from there. All right. Thank you, everybody. Appreciate it. Have a great day. I'll see you guys in a couple hours in the market close. Bye, everybody. Have a great one.